Welcome, everyone, to the European Market Open. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in Paris with Tom McKenzie in London. Now, here are your top stories. Advantage Macron, the first round of the French presidential election, gives the incumbent a narrow lead over nationalist rival Marine Le Pen. The relentless rise in U.S. yields continues to send waves through global markets. The 10-year climbs through 2.75% for the first time in 3 years. Plus, China's worsening COVID outbreak and factory inflation weigh on global stocks. The nation's bond yield premium over the U.S. vanishes for the first time in a decade. Tom, look at futures. What are they looking like?
Francine, we had, of course, that euro-dollar reaction to the back of that presidential first-round vote that, of course, you've been monitoring since the weekend. That's come off a little bit. In terms of the futures and the equity futures, you're looking at losses of 0.5%. That relentless rise in yields just continuing to broad-base pressure across these equity markets. You look, for example, at the US 10-year, above 2.75% in terms of the yield for the first time since 2019, and above the yield for the benchmark Chinese sovereign as well for the first time since 2010. In terms of how the markets are opening then, the Spanish IBEX is down 0.4%, lower by 37 points. The UK and the FTSE 100 is lower by 0.3%. Political scandal still engulfing the Chancellor of the Exchequer here. The German DAX is down by 0.8%. You have ministers meeting in Brussels on the question of Ukraine, and we know that there is pressure on Germany particularly to do more to reduce its dependence on Russian energy. The Spanish IBEX, as I say, down 0.3%. Let's look at how things are playing out across these assets then. The focus tomorrow, stateside, certainly will be that CPI print. You're expecting a number above 8%. Loretta Mester coming out over the weekend saying she thinks the Fed can engineer a soft slowdown without getting into recessionary territory. That debate, of course, continues. Is that a possibility? Just how much of a challenge is that for the Fed? The futures, S&P futures pointing low by 0.4%. We talked about the US 10-year yield currently at 2.76%, gains of 6 basis points in the session today. There is still inversion in parts of this curve as well that is causing anxiety for some. The bloodletting in the markets in Hong Kong is pronounced. You've got what's happening, of course, in the mainland in China, where you have the lockdowns in Shanghai and announcements in Guangzhou, the beating heart of Guangdong, which is the manufacturing export hub for China. But also you have that continued focus by regulators on the tech sector, lower by 3.25% for the benchmark over in Hong Kong. We continue to keep an eye on commodities. Part of that is the China factor as well. To what extent will the lockdowns there weigh on that demand for Brent, WTI and oil? Brent currently at 101, down 1.7%. We're keeping an eye, of course, on French assets, given what is happening with the politics there. 2 weeks away then from that runoff, that second round vote on April the 24th. We can get all the details, of course, from Francine with some great guests in the next few minutes. But in terms of how the assets are playing out, when you focus on the electorals and what it happens for the next 2 weeks as we watch those polls, the CAC 40 currently gaining 1.3%. So standing out from the rest of the pack on the back of this relief that Macron has won the first round, even if it was tighter than some had expected. The 10-year, the BTP is currently at 2.41, just up 1 basis point. We're watching for the Italians as well, because we know that a Marine Le Pen victory in the second round would put pressure, that is the assumption, on some of those peripheral debt pictures as well in terms of yields. The French OATs, the OATs, the 10-year currently at 1.26, range bound, so not much of a reaction there. And euro-dollar 1.08, also range bound. You saw a bit of relief earlier on for the single currency, currently at 1.08. Francine?
Yeah, President Emmanuel Macron is set to face his nationalist rival Marine Le Pen in the final round of the French presidential elections in a rerun of their 2017 contest. Well, snap polls taken after voting ended gave the 44-year-old president a narrow advantage heading into the runoff on April 24th. Now, the candidates spoke after voting closed last night.
I wish to extend a hand to all those who want to work for France.
All those who today didn't vote for Emmanuel Macron should join our movement.
They're able to decide what's good for the country. Never lose your faith in democracy. So you must not give a voice to Madame Le Pen.
I'm calling on my electors to vote for Marine Le Pen. The game isn't over, and the debate that we will have in the coming 15 days is decisive for our country and for Europe.
Well, let's get into the key market drivers in the wake of that election with Claudia Panzeri, head of equity strategy at UBS, and Ludovic Subran, Allianz chief economist, who joins me here in Paris. So thank you both for being here. Ludovic, when you look, first of all, at what the market is pricing in at the moment, are they discounting a Marine Le Pen presidency, and is that just complacency?
No, I think they, like everybody, think that the French Republican front, this idea that nobody will vote for the extreme will actually hold. So the markets are very benign quite now, and I think it's granted, it's warranted. I really believe that Macron can make it. The next 2 weeks are going to be essential because he has to go into the arena, he has to fight. And as you may imagine, also people are getting concerned about what comes next, which are the legislative election, whether he gets a majority or not, because the policy deadlock for France and for Europe would be dramatic. But for now, markets are being very happy with the results. I think it was an even closer call if you looked at the out-of-polls elections yesterday afternoon. People were concerned that Marine will come actually as first. So.
Okay, Claudia Panzeri, head of equity strategy at UBS. Let's bring you in at this point. Let me ask the same question that Francine asked Ludovic there. Is there complacency in these markets in terms of the reaction to this first round result?
No, I think we are just seeing what you already seen in 2017. So the market reacted a bit last week with some widening spread across the French bond, and we had some French asset under pressure. The euro was a bit under pressure as well at the end of last week when results were pointing to increase support from Marine Le Pen. But clearly, I think the market is not too complacent. And yesterday, we have seen a number of people supporting, endorsing Macron. So I think will be a close run, but we are not too concerned about having Le Pen winning the French election.
I mean, if I'm going to play devil's advocate, Ludovic, I just don't see it being a runoff of 2017. First of all, Emmanuel Macron has been in power 5 years. A lot of people don't like that. He's seen as elitist. And if you look at the anger vote, Mélenchon, Zemmour, and Le Pen, I mean, it's a big chunk of the French population.
No, and you're right. This is the biggest concern, that normally the second round of a French election is always against someone.
Right.
And so could it be against Macron this time? I think, he can still surprise on the upside. His outcome of the past 5 years have been actually quite good overall for the French.
Yes.
And he's very good in crisis management. Marine Le Pen still continues to promise stuff that are unrealistic in a certain way.
Ludovic, what are the markets really worried about? So she's no longer about Brexit. Are they still worried about some of the immigration border policy? Are they worried about spending? Like, what would the market press the panic button for if she were elected president?
The markets will press the panic button about, crazy spending, nationalization, expropriation, fait du prince. The markets will be very concerned about the way she would play war economics by basically seizing productive capital and making it her own. That, I think, what the markets will be very worried about.
Claudia, let's bring you back in at this point. The next 2 weeks, we're going to be watching the polls very carefully indeed. How do you want to be positioning, if at all, over the next 2 weeks?
I mean, we will not be positioned for the French election. I think at the end, we results also, as we already seen in 2017, not a real event which is driving a lot of the market. We have seen last week, we had some volatility around the French assets, as I mentioned before, some widening of the spread. But I think the market will remain focused on the CPI print this week, on the ECB on Thursday, on still conflict between Ukraine and Russia, but also lockdown in China. I think what is moving the market this morning is additional news flow coming out of China, but also additional news flow coming out of the conflict. So clearly the market will probably sometimes, time to time, look into polls, but I don't think the French election and the second round of the French election will be driver of the market in the coming 2 weeks.
Okay, Claudia Panzara, head of equity strategy at UBS, and Ludovic Subrin, Allianz chief economist, both stay with us. We'll get more insights and analysis just after the break. One line that's breaking, and this is one corporate that is in focus for us, is SocGen, the redhead. Société Générale, of course, the French lender, rising 8.2%, currently actually gaining 6.3%. So it's paired some of that heavier spike that we saw on the back of the news that it is going to sell its Russian unit, Rosbank, the Rosbank unit, and it's going to be divesting as well from its insurance subsidiary in the Russian market. They say it's going to not lead to an impact in the capital ratio. That is the line from SocGen, up around 6% on the back of the news. It's going to be divesting from its Russian business. We'll bring you more details when we get it. Francine.
Yeah, coming up, the relentless rise in Treasury yield sends ripples across global markets. Stocks move lower as we enter a key week for inflation watchers. All of that next. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We are 11 minutes into your European trading day. You're seeing losses of around 0.6% across the benchmark, the European Stock 600. The CAC Garonne in focus for us today, of course, after that first round vote with Macron succeeding, but of course moving to the second round on April the 24th, down 0.4% for the French benchmark. In terms of your sectors, two that are in the green this morning, banks and insurance. SocGen will be part of the mix there on the back of its news. It's selling down its Rosbank assets in Moscow in Russia. That stock gaining at 5%. At the bottom of the list, you've got autos, but also technology down around 2%. The rise in yields continuing to pressure the tech space, and that of course ties into what's happening in terms of inflation. That surge in treasury yields is sending waves through global markets today. Real US yields are getting closer now to turning positive for the first time since 2019. That is as investors are pricing in the Fed's hawkish shift and accelerating inflation. Cleveland Fed President Loretta Mester, well, she told CBS pressure on prices will continue into 2023.
I think that it will take some time to get inflation down because, as you know, there's other things going on in the economy that are adding to price pressures, including the commodity price increases and energy price increases that are happening as well. So I think inflation will remain above 2% this year and even next year, but the trajectory will be that it will be moving down.
Okay, still with us is Ludovic Soubrun, Chief Economist at Allianz, joining us out of Paris, and Claudia Pansari, Head of Equity Strategy at UBS. Claudia, let's bring you back in at this point. Loretta Mester also saying that it's her base case that the US avoids a recession, essentially that the Fed can engineer a soft landing. Is that also your base case? Does that chime with you?
Yeah, this is our base case as well. We also see inflation coming down in the second part of the year. We probably still one of two print, which will be probably higher. We expect a higher inflation print this week and the Fed rising rate 50 basis points in the next meeting, but we are not expecting the economy entering into recession this year and next year.
Are the markets underpricing the China risk, Claudia?
I think the market already priced a lot of risk in China last year. This beginning of the year, China was performing pretty well and now is getting even more volatile. I think what the market is probably underestimated because it's very difficult to estimate if a supply chain disruption we may have out of China. What does it mean for first and second quarter result for the company? For the time being, I was checking this morning, expectations are pretty low, both in US and in the Eurozone. So probably the market will react quite well if supply chain disruption are not impacting company results. But I think we didn't mention in the previous session, the quarterly earnings season is starting this week, and I think a lot of news will be published by the different companies in US and in Europe.
Yeah, we're firmly on earnings watch, but Ludovic, what the hell is going on with treasuries this morning?
Well, you know, it's a big question. Either we go back to 2018 and we have indeed this, increase in treasuries, but the soft landing, or it's another 94. I thought Claudia was, we have a very similar scenario, but I'm getting concerned now because if everybody is pricing in and the Fed will go for a soft landing, that maybe that the recession is in the cards. So I'm getting concerned about this idea that the Fed can solve supply-driven imported inflation. Yeah. I think the overheating part of the inflation in the U.S. economy was small, and now they're taking it too far, I think. But midterm elections. Talk about being a political Fed. This is all about this, yeah.
Yeah, I mean, this changes everything. U.S. real yields could turn positive. What does that mean?
Well, the cost of servicing debt in the U.S. is approximately 1.6, 1.7%. I think they can still go all the way to 2% of debt servicing costs in terms of GDP. So this is manageable, yeah. The question is then how it diffuses into credit spreads, especially high yield. The credit market has been very complacent. So that's what I'm concerned about. But, the big question also is what is going to happen on the Treasury side, which means on the fiscal side, because Yellen is ready also to do whatever it takes to make sure that the most vulnerable in the states are going to be, protected somehow in the cost of living crisis. So I think it's bad, but it's not that bad. But let's see what's going to happen over the summer, because if the reading of inflation tomorrow is above 8, and then it's 8, 9, 10, then it changes everything.
Claudia, you are gradually reducing your cyclical exposure. Talk us through what that looks like.
Yeah, so we reduce our exposure to financial. We have been positive on financial since a while, but now considering that the economy will slow down and inflation remains sticky, and with inflation of the yield curve, financial expected return since now less appealing than it was some months ago. We keep this energy commodity space very overweight, so we are still very positive on energy, and we are also very positive on healthcare. So what we are doing, it was switching something which was cyclical with some downside risk exposure with healthcare to something which is very, very balanced. We have now an overweight on energy plus healthcare, and on the underweight side, we have industrial and consumer staple. So we rather play relative trade rather than something which is outright positive. We have a neutral, I have to mention, we have a neutral recommendation on global equities. So this is why we are more balanced now than before.
Yeah, Clyde, to that very good kind of useful snapshot of what we do, what does, Ludovic, a policy mistake look like apart from the Fed getting it wrong? Is there another, either central bank or maybe going back to the China risk that we should worry about more?
Well, you know, when we look at the Chinese disruption risk, we're talking already about an additional 0.5 point of inflation in Europe, because Europe is more at risk, I would say, from the supply chain disruption because we're a bazaar economy and because of trade. Right. Because for every cent that we consume in France, for example, 33 cents is imported. For every cent of investment, 25 cents is imported, right? And Germany is really much at risk, right? Because they have the energy, the supply chain, and of course, the cost of living crisis really building up. So I think the next policy mistake is whether Europe treats the Ukraine crisis in a cannibalistic way or whether they collaborate. I think everybody's concerned, you know, just think about the French election. Every president, you know, every candidate was actually spending more. So the question of how we handle this crisis, if we collaborate or if we, you know, cannibalize one another, is really what is going to be important for the second half of the year. So whatever the U.S. momentum is, Europe then has to transform that into something positive for this continent.
Okay, Ludovic Souperin, Chief Economist at Allianz, on the potential policy risks and what to watch. And Claudia Pensaro, of course, Head of Equity Strategy, how to reposition in this very high inflationary environment. Coming up with factory inflation, talking inflation higher than forecast, and the largest COVID outbreak since the pandemic began. We look at what's moving markets in China. We'll unpack that story for you. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open. 21 minutes into your European trading day. Losses of 0.7% across the benchmark. Just two sectors in the green, insurance and banks. Everything else in the red, most prominently technology. Let's talk about banking stocks and technology then. Some of the individual stocks that we are focused in on today. SocGen announcing that it is selling down its Rosbank holdings completely. Also its insurance subsidiary in Russia. Just another lender there, Western company, pulling out and retrenching from the Russian market, gaining that company, that French lender, on the back of that news at 5.4%. Obviously, of course, the politics of France weaving into what is happening across these equity markets, relatively benign, but of course we know that Macron goes to the second vote on April the 24th. So SocGen gaining 5.4% or so, largely on the back of that Russia news. Infineon, one of the semiconductor companies we are focused in on as a result of this relentless rise in yields, down 2.7%. Of course, we know the tech sector is pressured by higher yields. That continues, of course. 2.74% is what you're getting on your US 10-year as things stand. BMW, the CEO, coming out in newspaper reports suggesting that the squeeze on the semiconductors and that supply chain constraint will continue at least until 2023. That company and that share price down 1.7%. Let's get the Bloomberg Business Flash now with Alice Atkins. Alice.
Morning, Tom. Elon Musk has decided not to join the board of Twitter in another twist to a saga that's captivated the online community. CEO Parag Agrawal tweeted that following discussions, the Tesla CEO ultimately declined their offer of a board seat. Musk recently disclosed he'd taken a 9.2% stake in the social media company. Chinese automaker stocks have dropped after electric vehicle maker NIO said it's halted car production. The company says deliveries will be delayed for a number of customers and several of its suppliers remain offline, affected by lockdowns as China battles the highly infectious Omicron variant. That's your Bloomberg Business Flash. Tom?
Alice, I'm going to pick it up. Thank you so much, Alice Atkins, there in London. Now, Shanghai recorded over 26,000 new COVID infections yesterday as China's largest outbreak continues to spread. The rising cost of fuel, meanwhile, is adding to soaring factory prices, putting pressure on manufacturers already strained by COVID lockdowns. Well, we're now joined by the China economy reporter, Tom Hancock, who's in Hong Kong for us. Tom, talk us through exactly what's happening in Shanghai today. We're also seeing videos of little riots.
Yes, the Shanghai lockdown has been very severe, so most people are not allowed to leave their homes at all. Even picking up food has to be done by volunteers within the community, and some communities have been short of food, so there have been areas where people have protested about that. It seems to be a minority of areas, but obviously it's very concerning for the people involved. Also difficult to get things like medical care. So, yeah, a very worrying situation for people in Shanghai.
Tom, there's the human story, as you've been discussing. We've seen some of that, certainly on social media in China, the anxiety over not getting access to food and healthcare. Then there's the economic story. What is the policy response likely to be from Beijing to try and alleviate the pressure that we're seeing as a result of these lockdowns?
Well, the message is clear that controlling the virus takes priority over the economy, and that's what we saw in 2020 as well. So they're not going to be doing any stimulating of the economy until the numbers start to come down. And what we've seen at the moment are just temporary relief measures. So tax cuts for businesses, and also households can delay payment on their mortgages and consumer loans. And also the government is organizing delivery of food to people who are under lockdown.
Okay, Bloomberg's Tom Hancock on the implications of those lockdowns in Shanghai. We know there are new restrictions coming into place in Guangzhou as well, which is the main city in Guangdong province, the main exporting trade hub within China. Let's check in on these markets then. The benchmark here in Europe down 0.5%, pairing some of the heavier losses, but still pretty significantly in the red across the European space. Banks and insurance amongst the four sectors now in the green. Basic resources and technology firmly lower this morning. But it's the focus still on the politics of France and the volatility that some expect over the next 2 weeks, Francine.
Yeah, I think the focus will definitely be on the reframing of the campaign. It's almost the second campaign that each candidate will have to put forward. They're going face-to-face, Marine Le Pen, Emmanuel Macron. It doesn't feel like it's a repeat of 2017, I have to say, just because it's a very different dynamic. Also, the president has been in charge for 5 years, so everything that will be against him is actually a vote for change. Coming up, we'll talk markets with Elvire Fabry, Senior Research Fellow at Jacques Delors Institute.
end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts, great questions. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. We are 30 minutes into the European trading day this Monday morning, and here are your top stories. Advantage Macron, the first round of the French presidential election, gives incumbent a narrow lead over nationalist rival Marine Le Pen. The relentless rise in US yields continues to send waves through global markets. The 10-year climbs through 275 for the first time in 3 years. Plus, China's worsening COVID outbreak and factory inflation weigh on global stocks. The nation's bond yield premium over the US, well, it vanishes for the first time in a decade. Francine is in Paris. She's been covering the first round of those French presidential elections. We're looking ahead to April the 24th now. And Francine, you're kind of pushing back on the idea. You're not convinced that this is a rerun of 2017 for Emmanuel Macron and Marine Le Pen.
Yeah, I think it's a very different situation. First of all, we know that Marine Le Pen has studied what she did wrong 5 years ago. She's much more knowledgeable on the economy. She's much better in debates. She has a very clear line in I'm trying to take care of you because inflation is rising and the cost of living. On the other hand, you have an incumbent, President Macron. He's done reforms. He has given actually people a lot of support to try and make up for the cost of living increase. But he doesn't have that political buffer because he's been in charge for 5 years, Tom. So if you're in charge for 5 years, you're not the hopeful young candidate that people will mobilize to go and vote for you. So I think it's a different kind of dynamic. I think the polls are very tight. If you look at the tightest poll, it's a 51% win for Emmanuel Macron. That is within the margin of error of Marine Le Pen possibly becoming president. I know it's not base case, but still there's probably a 25 to 30% chance that she becomes president, and that's not insignificant for the market.
Absolutely. We're speaking to a guest on Bloomberg Radio earlier from Bred Banque Populaire saying, look, they see a 70% chance of Emmanuel Macron winning. But of course, as you say, that still leaves a 30% chance of Marine Le Pen becoming victorious come April 24th. You discussed this. We were talking about whether or not there's complacency in the markets. Let's check in on those markets then. There's been a bit of a turnaround for the CAC 40 and a bit of a turnaround more broadly across the European markets, pairing some of the earlier losses, though you are still lower by 0.2% across the benchmark stocks 600. The DAX is lower by 0.3%. Here in the UK, the FTSE 100 lower by 0.2%. Let's see how things are breaking down then sector by sector. That relentless rise in yields, we've been discussing this, above 2.75% for the first time, the US 10-year since 2019. And of course, that yield differential that you did see becoming quite apparent between the US sovereign and the Chinese sovereign, that has now disappeared. Banks are gaining on the back of that yield story, gaining 0.8%. 1%. Very different picture for technology, of course, down more than 1%. By the way, technology and Chinese companies listed in Hong Kong, investors in those companies just getting no respite at all. The HS Tech Index lower by more than 5%. Basic resources also down. We're watching oil. There's been some lines out about the negotiations with Iran, but of course concerns about demand from China on the back of the lockdowns and further restrictions in Guangzhou. We know the Brent and WTI are lower this morning. That's feeding into the basic resources story as well. So that's the picture across these sectors, Francie.
Yeah, so back here in Paris, President Emmanuel Macron is set to face his nationalist rival Marine Le Pen in the final round of the French election in a rerun of their 2017 contest. Now, snap polls taken after voting ended gave the 44-year-old president a narrow advantage heading into a runoff on April 24th. So we're joined now by Elvire Fabry, Senior Research Fellow at the Jacques Delors Institute, to talk about political gaming and who becomes the next president. Elvire, as always, thank you so much for joining us. I don't know whether the market is complacent or the polls will fluctuate quite quickly. We get on to now 2 intensive weeks of campaigning. How much can the position of each candidate change?
Well, what is interesting is that, as you just underlined, Marine Le Pen has really softened her image. And she was helped with that by Zemmour, which had a much more extreme speech, and herself, she has presented she has positioned her party on a much more radical position than extreme discourse, and this was helpful just to create more reassurance with her electorate, but also with the markets. And but the fact is that at the moment, while she has softened the image of her party, not presenting, not advocating for any Frexit, when you look at the content of her program, all the content is really going in counter of the European treaties.
Anti-immigration, anti-globalization is what we're seeing from Marine Le Pen. Elvire, talk to me a little bit about the fact that actually now there's a rupture in French politics. We're not talking about left versus right anymore. It's basically establishment and anti-establishment. If you look at the Jean-Luc Mélenchon, Zemmour vote and Le Pen, they're all anger votes.
They completely, yes, exactly. They're anger votes, and Marine Le Pen is really addressing the working class, showing to the people that she's protecting them, and the position that she took has been helped by the war in Ukraine, because on one side she's proposing to the people to protect them, to have more state interventionism, to have lower taxes on fossil fuels, and all different measures that would reinforce the role of the state. While on the other side you have Emmanuel Macron, who's proposing a long-term perspective with strong investment on economies to have a stronger France in a stronger Europe, but who continues to embody the role of a leader, yes. Responsible leader, but ready to engage in competition, while Marine Le Pen is embodying more the group of the left behind.
Yeah. But if you look at the support that Emmanuel Macron has given a lot of French citizens, it hasn't been bad. It's been one of the highest in Europe. Can he play that card in the next 2 weeks and say, look, guys, I've supported you, I've helped you?
Yes, because when you see the assessment of his program, of 5 years of program, and finally he's ending with quite a positive score at this first round. But what is lacking at the moment is that there's no new ideas in his program which will show the people what could be new for the next 5 years. And so he will have to engage on the economic ground and defend all the different measures that he's been presenting, and what's new for the people, precisely to protect them and to protect the power purchase.
I mean, is there an opening for Emmanuel Macron to actually, show the world the links that Marine Le Pen had with the Putin regime, and do voters care about that?
I'm not sure at the moment it will be the main line, because precisely what was going that sort of isolationism position is also, people are also sensible to that line, and at the moment what they're feeling is that they've been getting out of 2 years of COVID and moving from one crisis to the other one, and they feel that they would feel more protected by by Marine Le Pen. And once again, Emmanuel Macron is promising long-term investment and courageous measures.
But he'll have to change. If he wants to win, something will happen in the next 2 weeks, right?
Yes, he has very little time, and he needs to go in the departments, and he needs to go in the cities and talk to the people and feel more closer, show them that he will be there to protect them.
Do you think he can turbocharge his campaign right now? I mean, he has a personality that does quite well in TV debates. He can gather large crowds.
Well, yes, but finally, when you listen to him yesterday, he wasn't. He didn't feel that engaged in the campaign. So he will need in a way, he needs to go back to his campaign of 2017 when he was much more. Well, he had a sort of he was moving much more the crowd and the citizens.
Yeah, I guess he'll have to dig deep, but it is clear that also a lot of people here in France, Elvire, thank you so much, Elvire Fabry, Senior Research Fellow at Jacques Delors Institute. Tom, what I was saying is that there's a lot of people here in France that basically think that Emmanuel Macron has maybe not let them down, but certainly does something for the rich, that he's an elitist president, and that's maybe the image that he'll try and shake off in the next 2 weeks. Now, we'll have plenty more from Paris throughout the morning. In the next hour, we'll also be speaking to Jean-Claude Trichet, formerly ECB president and governor of the Banque de France. So we'll talk about living standards, and of course, we'll talk about inflation and why not treasuries as well, Tom.
Okay, and we're talking, of course, about the geopolitics. We continue to keep an eye on what is happening in Ukraine. We know that foreign ministers, of course, of Europe are arriving. We're seeing live pictures now of one of the Austrian ministers there speaking to the press outside and just before that meeting in Luxembourg. We know, of course, that the Austrian Chancellor is going to be visiting Moscow for a meeting with Vladimir Putin. So we continue to keep across this and any further response in terms of sanctions and restrictions on China from the EU. Okay, coming up, more on the war in Ukraine. EU allies are due to meet in Luxembourg, as we discussed, to talk about additional sanctions on Russia. That is next. We'll get the details with Maria Tadeo. Stay with us. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the Open. We are 43 minutes into your European trading day. Losses of around 0.1% across the benchmark, pairing some of the heavier heavier selling that we saw earlier on the session. Certainly, you've seen some churn around in terms of the CAC 40. That's gaining now 0.6%. Emmanuel Macron, the French president, of course, victorious in the first round, but he will go to a head-to-head with Marine Le Pen on April the 24th. You're also seeing gains in Italy of 0.4% at the Spanish IBEX, up 20 points. We do know, of course, foreign ministers meeting in Luxembourg to discuss the next steps when it comes to sanctions on Russia. We've just been hearing from the Austrian foreign minister. Now you can see, of course, the German foreign minister, Ms. Baerbock, speaking to the press there live in Luxembourg. And of course, we're across any lines that come out from these foreign ministers on the potential further ramifications and tightening of restrictions and sanctions on Russia and the Russian economy. We're getting more details from Maria Tadeo shortly, who's on the ground for us. But those are the live pictures. In terms of what you're seeing, by the way, across the sectors here in Europe this Monday morning, you do have about 5 sectors remaining in the green. Banks at the top of the list, gaining more than 1%. At the bottom of the list, basic resources, followed by consumer products and technology. Yields, of course, continuing to rise. Most pronounced in terms of the sell-off on bonds is at the front end, the 2-year in Europe and the US as well. Currently, you're looking at a US 10-year at 274, the US 2-year at 256, up 5 basis points. Francine is on the ground in Paris for us. She's been covering the first round of that French election. And of course, what we're seeing now in the markets, Francine, is possibly a sense of relief. Of course, SocGen is an anomaly in terms of what's happening in the French equity space. But you've got green on the screen when it comes to the CAC 40.
Yeah, Tom, I think one thing that is maybe being lost when you look at the markets is also the fact that this election is extremely important for the whole of Europe in how the next president will deal with Ukraine. So if you look at the traditional ties that Marine Le Pen has had with Vladimir Putin, the same thing with Éric Zemmour and some of the other ones on the right, this could really be a game changer, especially since we saw on Friday the president of the Commission, Ursula von der Leyen, showing up in Kyiv and giving, of course, that piece of paper to the President Zelensky of Ukraine to try and get him to access the EU. Now, it's interesting to see here, most of the campaign is about the cost of living and inflation. That's due to Ukraine. But then when you look at geopolitics, and Emmanuel Macron really has made a huge effort to try and be the gatekeeper of peace between Russia and Ukraine. That has not worked. And I would say that it is really at the back of people's mind what's happening in foreign policy, much more concern about, of course, inflation and the cost of living, Tom.
That cost of living crisis, it's apparent here in the UK, front and centre within the politics of France as well. Francine on the ground, of course, in Paris for us, covering the twists and turns of this election, looking ahead to the next 2 weeks up until April the 24th. Let's get the Bloomberg First Word News now with Alice Atkins. Alice.
Hi, Tom. UK Chancellor Rishi Sunak has asked for a formal review into whether he properly declared his financial interests. The move comes as Sunak faces intense pressure to lay out the details of his family's financial arrangements, after it emerged that his millionaire wife, Akshat Murthy, holds non-domicile status and was legally avoiding UK taxes on her overseas income. China's factory gate prices and consumer inflation both rose more than expected in March. The producer price index gained 8.3% from a year earlier as oil prices climbed, putting pressure on manufacturers already struggling to operate amid repeated COVID outbreaks. CPI inflation accelerated to 1.5%, with fuel and vegetable prices adding to the gains. Pakistan's lawmakers are set to choose opposition leader Shehbaz Sharif as the next Prime Minister after Imran Khan was outed in a no-confidence vote ending his 4-year run. Khan rallied supporters over the weekend against what he called US-backed regime change. The former PM fell out with Pakistan's army over a range of issues. The military has ruled the country for almost half of its 75-year history, and no Prime Minister has completed a full term in that time. In an exclusive interview, Pakistan's central bank governor told us he's confident in securing the remaining part of an IMF loan.
Finance Ministry as well as the central bank. We are quite confident that quite soon we will be able to put the delay behind us and soon announce the good news of completing the next tranche for the IMF.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Alice, thanks so much. Alice Atkins there in London. Coming up, we'll talk Twitter, and we'll, of course, talk about Elon Musk. He delivered a twist to a week-long saga that's really captivated the tech community. He will not be on the board of Twitter. That story is next, and this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. 51 minutes into the European trading day. A loss of about 0.1% across the benchmark, but a bit of a turnaround in some of the indexes, particularly in France. The CAC 40 gaining 0.8%. Francine.
Yeah, let's get the latest on the war in Ukraine. President Zelensky actually expects Russian forces to widen their offensive in the east of the country as they abandon parts of the north. Now, it does come as EU foreign ministers are meeting in Luxembourg now to discuss new sanctions. Let's get straight over to Luxembourg and to our Europe correspondent, Maria Tadeo, who's there for us. Maria, EU sanctions on Russian coal have been approved. What other sanctions can we expect?
Well, Francine, we know that package, the fifth package, was approved. That ban on coal is now official when you look at the European Union and those imports that they take from the Russian Federation. But the question is, what happens next? And today there will be already a debate in terms of the next package. And a lot of this hinges around the question of oil in particular. Gas, it does seem that for the time being is simply a no-go. But oil, it is being debatable. A lot of this, Francine, in anticipation of what European officials, but also Ukrainian authorities have been warning about a major offensive on the east. Remember, this is the so-called battle for Donbass. The two sides, Ukraine and Russia, contest this territory. But also, Francine, if you look at the situation, the clock really ticking for Vladimir Putin to be able to win something on the ground ahead of Victory Day on May 9th. For the Ukrainians, if they're able to repel the Russians on the east, they say that will give them leverage when it comes to the real peace talks.
Okay, Maria Tadeo on the ground following, of course, the latest on that foreign ministers meeting in Luxembourg. We had a line out from Baerbock, of course, the foreign minister of Germany, saying the EU needs a joint plan to exit Russian fossil fuels, just to Maria's point on the need to focus on energy and the energy dependency and how complex that is for EU officials. Now, to the geopolitics, from the geopolitics to Twitter. A very different shift, of course, and Elon Musk deciding not, this is interesting, to join Twitter's board, according to the company's CEO. Of course, he had the ability to do that. Parag Agrawal tweeted that Musk held many discussions with Twitter's directors, but the billionaire ultimately declined to take their offer to take a board seat. Musk informed Twitter's board the same day that he was slated to formally join. Joining us now then to work through this is Bloomberg Quick Take host Alex Webb. Alex, it's been a pretty eventful week for Twitter, to say the least, with Musk, of course, becoming the biggest shareholder of Twitter. What should we make of the fact that he's decided to decline the offer to have a board seat?
Well, he took a 9.2% stake, and there was some suspicion that he might try to launch or try to acquire an even bigger stake than that. And one of the conditions of him joining the board was that he would not acquire more than 14.9%, 15% of the company. So by not joining the board, that does open up the possibility that he could acquire a bigger stake. And perhaps in extreme circumstances, some people suspect he might even try to launch a takeover. It's a big, that's a big leap, but there are some people who think that might happen.
So, Alex, how messy is this going to be? I mean, we could talk about nothing else. I know he's doing a number of polls, also with some pretty childish remarks. Some find it funny, some don't. But, what happens next?
Well, I think the view certainly, it seemed as though the view from Parag Agrawal and other people on the Twitter board was better to have him inside the tent creating havoc than outside doing it. And I think that, now he is very much outside the tent. If he's in the boardroom, they're all pulling in the same direction. The thing is with Twitter is that Elon doesn't need Twitter to perform well financially. If Twitter were to gain 1,000% in value, it would be the same gain for Elon as what Tesla has done for his net worth over the past sort of 2 or 3 weeks. So it's really a rounding error for him. That means it's not entirely clear that his interests align with those of other shareholders. It's maybe more about influence, about changing the way Twitter is run, than it is about creating shareholder value. And so that is, I think, the concern if you're a Twitter shareholder, unless, of course, he does launch a takeover value and make your shares worth a lot more.
He certainly has the cash to be able to take over the whole business.
Well, I'll
let you follow up on that. Okay, not the cash.
He's got the net worth, but he would have to sell shares or raise debt against it.
He could easily get some leverage and buy it. What is the idea what is the motivation for Musk if he was to go down that route? What does he want to get from this?
Well, if you could think about Twitter as being an incredibly useful tool to talk up Tesla shares and shares of other things if they decide to go public. So ensuring that he has that mouthpiece, because maybe there's the risk that perhaps they crack down on him if they think that he's not towing the line in terms of what sort of speech is allowed on Twitter. That is maybe a risk to Tesla, right? If Tesla can't generate the free press that Elon does through Twitter, then maybe its share price starts to suffer. So there is maybe some sort of play there. There are just generally, you never know with Elon whether he's just causing some sort of chaos, throwing chips in the air and seeing where they land.
All right, Alex, thank you so much. Alex Webb there, who covers tech for us, also on Bloomberg Quick Take. Now, we'll have plenty more, of course, from Paris. We'll have plenty more on the markets. In the next hour, we'll also be speaking to Jean-Claude Trichet, formerly ECB president and governor of the Banque de France. So we'll be talking about inflation, we'll be talking about the cost of living, and whether there's really a chance of Marine Le Pen becoming president of France. That's it for the European Market Open. Surveillance Early Edition is up next.
When you think space, you probably think
One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The debate that we will have in the coming 15 days is decisive for our country and for Europe.
All those who today didn't vote for Emmanuel Macron should join our movement.
You must not give a voice to Madame Le Pen.
I'm calling on my electors to vote for Marine Le Pen.
This is Bloomberg Surveillance, Early Edition, with Francine Lacroix.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London, actually in Paris today. Here's what's coming up on today's program. It's been a wild morning. Advantage Macron, the first round of the French presidential elections, actually gives the incumbent a narrow lead over nationalist rival Marine Le Pen. The surge in Treasury yields sends ripples across global markets. The benchmark 10-year yield rises to 2.75% for the first time since 2019. And stay with Bloomberg Surveillance Early Edition because this hour we have top lineup of guests, including BNP Paribas chief economist William de Wilders and the former ECB president Jean-Claude Trichet. You can send in your questions on IB Plus TV Go. So first, let's check in on the markets. Danny, given I don't know whether I'm in Paris and London, maybe you take that over and tell us what's happening on the stock 600.
Well, I am in London, certainly, Francine, but these markets are all over the place. It really is fueled by a bond sell-off. I talked to a lot of U.S. investors before they went to bed, which would be our morning, and said, hey, I might see 3% on this U.S. 10-year yield when I wake up. Well, we're certainly not there, but it is a rise of about 6 basis points in that U.S. 10-year yield. Now, on the docket this week, we have CPI, PPI, import prices, all coming from the U.S., so anticipation of higher inflation is driving the bond market action, that having repercussions for Europe, for U.S. stocks, but also, Francine, for the yen, that pairing 125 blowing through that level is the highest for the dollar versus the yen since 2015. And then meanwhile, looking at Europe, you are seeing a little bit of divergence here, mostly negative, but will point out there the CAC Euron outperforming. Francine, I'm not going to dive too deep into this because I know you have it covered and can cover it better than I can, but a little bit of a relief rally there, especially in French banks.
Yeah, President Emmanuel Macron is set to face his nationalist rival, Marine Le Pen, in the final round of the French election in a rerun of their 2017 contest.
I wish to extend a hand to all those who want to work for France.
All those who today didn't vote for Emmanuel Macron should join our movement.
They're able to decide what's good for the country. Never lose your faith in democracy. So you must not give a voice to Madame Le Pen.
I'm calling on my electors to vote for Marine Le Pen.
The game isn't over, and the debate that we will have in the coming 15 days is decisive for our country and for Europe.
Well, joining us now in Paris, William de Wilder, chief economist at BNP Paribas. William, you're basically chief economist plus a political strategist, given everything that we're seeing with the French election. What are the chances Marine Le Pen becomes president?
Well, I can only look at the surveys, the polls that have been conducted, so they show a clear result, although it's far more narrow than what we have seen as a result in the previous elections. So that also
30%.
means
Let's put it at 30%, 25% for Marine Le Pen?
Well, you look at the poll results, so that's what they say. They say that Macron will win. It's going to be more of a cliffhanger than what was expected previous time.
So, William, what does this mean? If Marine Le Pen is president, what does it mean for the French economy?
Well, what it means is then the entire focus will shift on what is going to happen for the parliamentary elections, because you still have a parliament and you need to have a government and you need to have a majority. That's point one. Point number two is, how will the messaging change once that the election outcome is known? Because that's another important point. We should keep in mind that the program is very much, her program is very much a program of I'm going to help people in terms of spending power, but it is also expensive if you think what it would cost in terms of budget deficits and so on. So you can already imagine that markets would then, of course, react to that quite significantly.
Yeah, she's anti-globalization, she's anti-immigration. She's no longer talking about Frexit, a France exit of the EU. But what kind of European integration would we see under her if she were to be president?
Well, that is one of the important question marks that we are facing today, because we have been used in the European Union to have a very strong role played by France, and also a very close relationship France and Germany. So how that will look like and what it means for the European agenda is a big question mark. We should not forget that the role of France and Germany together in launching Next Generation EU, for instance, has been fundamental. Would we have another situation? Hopefully not. What would that imply? So it's all question marks, I'm afraid to say.
Well, yeah, so many questions, Mark, and very few answers, which is why we're trying to break it down and really make our viewers understand what we're looking at. So if you talk about debt to GDP ratio, and this is one of the main concerns, people like Marine Le Pen, she has momentum in her campaign because she's saying, look, I will take care of you. I will subsidize this, this, and this to make sure that your cost of living doesn't increase too much. If she pushes and gets through what she's promised, what kind of debt to GDP ratio would France have?
Well, I cannot put out a number just like that, because it means that what exactly she would do. What is clear, though, is that what I would expect is that in the next 2 weeks there's going to be a very strong emphasis put on, please, people, be attentive, pay attention to the fact that everything that is being promised will come at a considerable cost in terms of finances, and that means more debt, and that means...
And the voter cares about this?
Well, that is what you have a campaign for, to be very clear. So what I would also expect is that in the next 2 weeks, it's really, you take off the gloves and you will be very clear on both sides, by the way. And what I would also expect is that there's going to be a strong insistence on all the efforts that have been put in place and that were effective, in particular in the COVID-19 pandemic, to really cushion the impact to households. Now, I must admit, that's what you said. It's a very clear program that she's offering. I'm going to do this and this and that, and you will feel better off in the short run.
Yeah, and depends who pays for it. William, thank you so much. William de Wilder, their chief economist at BNP Paribas, stays with us, and we'll talk a little bit more also about the Fed and maybe the Treasury move that we're seeing today. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne. I don't think we have Leanne, actually. We'll get back to Leanne in just a second. We heard, of course, from Leanne Gerrans going through a number of stories that we're seeing also in Pakistan, a number of things happening with Elon Musk. Now, we're getting some breaking news out of Glencore. Glencore trading above its IPO price for the first time since 2011. Now, right before stepping down, we did hear from the former Glencore chief executive, and he was telling me that what the market is misunderstanding in the transition and transitioning for a very fossil fuel fuel-led economy to what we're seeing in terms of renewables, we have to make sure that we have the pieces and we have also some of the rare earths needed for the transition. So we'll have plenty more, of course, on that throughout the day. Then we go back to Paris. We come back here in just a couple of minutes. We'll be speaking, of course, to our guest about some of the things that could impact the markets. That's euro dollar and, of course, a European integration. Also, Smart Conversations continue right here on Bloomberg Surveillance Early Edition. Later this hour, we speak exclusively to the former ECB president, Jean-Claude Trichet. So you can send in your questions today already on IB Plus TV Go. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
That it will take some time to get inflation down because, as you know, there's other things going on in the economy that are adding to price pressures, including the commodity price increases and energy price increases that are happening as well. So I think inflation will remain above 2% this year and even next year, but the trajectory will be that it will be moving down.
Well, that was Loretta Mester there, Cleveland Fed president. She's confident the U.S. will avoid a recession as the Fed tightens monetary policy. Now, Mester is, of course, a voting member of the FOMC this year. So the relentless rise in U.S. Treasury yields has continued to send waves through global markets as investors adjust to an increasingly hawkish Fed. William de Wilder, chief economist at BNP Paribas, is still with us. William, when you look at, first of all, thank you so much for braving the sun this time and not the wind like we had on Friday, for staying with us. When you look at what treasuries are doing today, what are they looking at? And actually, U.S. real yields in the U.S. could turn positive. What does that tell us?
What it tells us that the market is convinced that the Fed is going to be very aggressive, and that ties in with the messaging that has been given in recent weeks. People compare themselves now with Volcker, and that's a very strong signal, of course. Whether it gives you comfort from a growth perspective in the course of 2023, that's another story, of course.
Yeah, but so do you worry, actually, that this could plunge the U.S. into recession, or are we looking at a soft landing?
Well, we know the history shows that there has been one soft landing in 1995, and all the rest have been tougher experiences. Another point which is good to keep in mind is that economists do a very poor job in forecasting recessions several quarters out. Why? And that means that because I think psychology plays a fundamental role. At a certain moment, households that have money to spend stop spending. companies that still have good cash flow, they stop investing. And why is that? Of course, because confidence drops. And I'm a firm believer in this psychology. Now, what is important to keep in mind is that as of the end of this year, all the talk will be about the disinflation in 2023. That is going to be the dominating topic because there's going to be a drop-off in inflation because of base effects, because of slower demand growth and what have you.
William, do you see the same thing this time? And we're also after 2 years of COVID where people have not spent, where there's, I guess, pent-up demand and people want to go out and burn some cash. So that with rising inflation, like how will these two opposing views actually crystallize?
Well, in the aggregate, inflation is kind of taken on board. I'm also concerned about the more heterogeneous aspects. That is that if you think, for instance, on excess savings in France, for instance, the bulk of the excess savings was with the higher income parts of the income distribution. So the less well-off, they all suffer. And also, I think what you can expect is that in terms of deploying these excess savings, if at all that happens, that people will still become more attentive to perhaps finding a cheaper deal.
All right, William, don't go anywhere because we'll talk about China next. Over in China, Shanghai recorded over 26,000 new COVID infections yesterday as the country's largest outbreak continues to spread. Now, the rising cost of fuel, meanwhile, is adding to soaring factory prices, putting pressure on manufacturers already strained by COVID lockdowns. We're joined for more by our Chief Asia Economics Correspondent, Enda Kern, in Hong Kong. Enda, good morning. So talk us through exactly what's happening in Shanghai.
Well, Francine, Shanghai remains under a very strict lockdown there, and like you mentioned, cases continue to soar. We are, of course, seeing reports from our own colleagues on social media about the level of disruption that's imposing on the citizens of Shanghai, and some of that disruption is showing up now in the official data. We had inflation data today, which showed an uptick in consumer prices to 1.5%. That's obviously nowhere near the scale of the increase in the US, for example, but it was much higher than expected, and it represented a 17% uptick, for example, in the price of vegetables. And people are saying that reflects the kind of disruption to the food supply chain in China on the back of the aggressive measures to contain COVID. So some signs of the COVID lockdown showing up in consumer inflation. Producer prices also increased today, by the way. That reflected a big jump in oil prices, less of a China story. However, when you consider the pressures that consumers or the producers are now under, also trying to manage these COVID lockdowns, rising prices will also add to the problems they're facing. So when you take it together, rising inflation and COVID lockdowns, obviously you're looking at more pressure on China's economy and making the task even harder to meet that 5.5% growth target.
Enda, thank you so much. Our Chief Asia Economics Correspondent, Enda Kern there. William, when you look at how world economists actually look at China, are we underestimating the disruption that could come from that, or will PBOC be there to support it?
Well, if there is support, which we would expect to happen, is going to be domestic support and to cushion the blow to households for the global economy. That will not be helpful. It will only be helpful very indirectly. So the key point is that we are facing is that the delivery times are lengthening again in March after improving in January, February, and that may very well continue. What we're experiencing in the world economy now is a combination of shocks, which is quite unique. Yeah. Fortunately, by the way, you have a health shock that is still going on. You have a commodity shock, you have a geopolitical shock, and you have a monetary shock. So how many punches can you take on the chin? That's the key question that we're facing.
How does that not plunge us into a recession then?
Well, the reason is that if you look at the, let's say, the glass is half full perspective, that is that you can argue the demand aspects of China, that's really domestic. US, for the time being, it's pretty domestic. We're not yet in the phase of spillovers from fat lightning to the rest of the world. Even the health shock has become very domestic in China. Geopolitics, that's Europe's issue. So what you have is that it's like every region of the world has its own specific shocks.
I know, but put together, William, I've always been an optimist. And then, today I'm starting to wonder some of the price valuations on the markets. Is that fair?
Yeah, well...
You're a half-past-full person.
My take is that, for me, market timing, that's really recession spotting. And that's, for me, the only thing that counts. And we're not there yet. a lot of people have talked about the flattening of the US curve, but on the other hand, if you look at the short end of the curve, that's steepening. So they were still kind of taken on board. And that's my point why it's so important to think about the disinflation 2023 story that will come at the end of the year.
Yeah, and I feel like also the end of the year is when energy prices are going to be much harder to, of course, manage because of stockpiles that will have been released in the meantime and harsher winter.
Cross your fingers.
I know. All right. Well, this is a date. I'm going to speak to William at the end of the year, hopefully many times before them, but at the end of the year, we'll take stock and we'll see the optimist versus the pessimist. I've never been a pessimist in my life. We'll see who's right. William de Vilder, their chief economist at BNP Paribas, joining us on a pretty sunny, almost too sunny Paris terrace. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. A little bit later this hour, we also speak exclusively to the former ECB president, Jean-Claude Trichet. You can send in your questions on IB plus TV Go. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Russian troops will turn to even more large-scale actions in the east of our country, may use even more missiles and air bombs against us.
President Volodymyr Zelensky there saying he expects Russian forces to widen their offensive on Ukraine. Now, let's stay on that story. And EU foreign ministers are due to meet in Luxembourg today to discuss further sanctions against Moscow. Bloomberg's Europe correspondent Maria Tadeo is in Luxembourg for us. So, Maria, EU sanctions on Russian coal have been approved. What kind of sanctions could we see next?
Yeah, Francine, and they were just approved on Friday, but the conversation here is what happens next. They're already prepping the next package. All of this, as you said, in anticipation for what they believe will be renewed fighting in the east of Ukraine. Now, in terms of where we go from here, well, Francine, at this point, it is very clear that there's not much left they can sanction unless they go into oil and gas. For the time being, gas is simply a no-go, but oil could be debated. Today, we know that a number of countries will try to put it on the table. A lot of this, as I said, in anticipation of that attack in the Donbass. Now, the Ukrainians say they believe that Russia will double down in the region. In many ways, this is a place where it all started, and the pressure is on both sides to try to really score a big military victory. For Russia, of course, it's the clock ticking ahead of Victory Day on May 9th. For the Ukrainians, they really believe that if they're able to repel a Russian attack on the east, then that will give them leverage and a stronger position going into those talks. Remember, Francine, for the time being, the talks continue, but both sides are kind of just waiting for that battle for the Donbass before they actually get and sit down in the real negotiating table. So a lot of this will depend on the outcome of this battle, which, as I said, you know, the Ukrainians expect could happen imminently.
Maria, the Austrian Chancellor also will meet Vladimir Putin in Moscow today. What can we expect from that?
Yeah, Francine, and there's a lot of nervousness about this trip because this is done on a personal capacity. This is a chancellor who's been on the job for about 2 months, not a lot of foreign policy credentials. We know how those meetings with Vladimir Putin can go. We know press conferences with Vladimir Putin can be a total car crash for unexperienced political leaders. But I just spoke with the foreign minister of Austria, and he told me they're still standing by this trip. They're defending the trip. They say that the chancellor will give him a clear message that the war needs to end, that Ukraine needs a humanitarian corridor, and all of this is happening on a personal basis. But Austria says any voice that can help perhaps de-escalate tensions is important and should be welcomed.
Maria, talk to me a little bit about that very important Ursula von der Leyen visit to Kyiv on Friday, where at some point she also hands a piece of paper to the president of Ukraine for, access to the EU. Is this just on technical terms, because then it's up to the leaders? And is there appetite, real appetite from leaders to make the Ukraine part of the EU?
Yes, Francine, and remember, she went to Kyiv. That video of the two of them gone completely viral on social media, again, representing in the eyes of the European Union that unity that the EU has when it comes to Ukraine. But you're very right. We know that this is a divisive issue for European leaders, some who believe after all the fighting, after everything the Ukraine and the Ukrainian people in particular have gone through, they should be given a path to membership. Others believe that ultimately this is a war. It's going to be very difficult.
Thank you so much, Maria Tadeo there in Luxembourg for us. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Up next, we speak exclusively to the former ECB President Jean-Claude Trichet. Send in your questions on IB Plus TV Go. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Advantage Macron. The first round of the French presidential election gives the incumbent a narrow lead. We'll see what happens on April 24th. The surge in Treasury yields sends ripples across global markets. The benchmark 10-year yield rises to 2.75% for the first time since 2019. And stay with Bloomberg Surveillance Early Edition. Up next, we speak exclusively to the former ECB President, Jean-Claude Trichet. You can send in your questions on IB Plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, first thing is first, let's check on the markets. My colleague Danny Berger is in London. Danny, what do you have?
It really is a market dominated by the bond action, Francine. Look, the sell-off in treasuries, it's not as acute as it was when I first came in this morning some hours ago, but still we're looking at 10-year yields that are higher by about 5 basis points. You mentioned this, the highest since 2019. Is 3% the next target on this as we look towards CPI, PPI, a lot of inflation data this week. Now that's having an impact on equity markets. Stocks in Europe down 0.7%, a decline in U.S. stocks, NASDAQ down more than 1%, and the yen, another casualty of this move in bonds. The Japanese-U.S. bond differential means that we're looking at the yen at its weakest since 2015. Finally, you should also point NYMEX crude on there, down more than 2%. That off the back of weakening mobility data in China. What does that mean for demand? Now, the one bright spot in this European market are French equities, with most of the regional benchmarks falling. The CAC 40 is flat. And let me show you what's leading this higher. SocGen, the highest returning stock so far this morning in the stock 600, as with BNP. So French banks doing well, a little bit of dip buying there with Macron leading in the polls. But SocGen also has its own idiosyncratic story that's allowing it to gain more than 5%. SocGen, for its part, has said that it's disposing of its Russian assets. It's selling down its share in Rosneft to Russia's wealthiest man, the firm owned by him. Finally, Rheinmetall, a little bit related here as well. Of course, the German defense company has rallied 150% this year, considering there's more defense spending from European nations. Well, the news this morning, the UK exercising an option to buy 100 Boxer armored cars. That's sending Rheinmetall higher to be the second best performing stock in the stock 600 this morning, Francine.
Danny, thanks so much. Our Danny Berger there with the stocks we need to watch and some of the asset classes as well. Now, President Emmanuel Macron is set to face his nationalist rival, Marine Le Pen, in the final round of the French election in a rerun of their 2017 contest.
The game isn't over, and the debate that we will have in the coming 15 days is decisive for our country and for Europe.
All those who today didn't vote for Emmanuel Macron should join our movement.
Well, Jean-Claude Trichet was president of the European Central Bank from 2003 to 2011, governor of the Banque de France from 1993 to 2003, and before that, undersecretary at the French Treasury. Now, in these positions, he was instrumental in pursuing the French strategy of competitive disinflation in the 1980s and 1990s. Well, Jean-Claude Trichet joins us now. Thank you so much for joining us. I have a million questions on game theory, on who will become president, things like that. But first of all, are the markets too complacent? It seems like Marine Le Pen has momentum in her campaign, and actually this time she could become president.
Yeah, I think nobody has really looked at the program of the various candidates, obviously. It was more or less under the screening of everybody. So we will see what happens now that the program will be screened very, very cautiously.
What do you think Marine Le Pen stands for? I mean, we understand that she's no longer advocating a Frexit, but she's still anti-immigration, anti-globalization. So what does it mean for the economy of this country?
Well, she's anti-globalization, of course, anti-Europe, even if she didn't say that she would call for Frexit or she would call for abandoning the euro, because she understood that it was not a winner at all. But still, of course, she's not at all pro-European. She was very close to Russia and to President Putin, which is more or less the, I would say, attitude of the extreme right in Europe, in all European countries, close to Putin. So again, it would be a major, major political strategy change for France and for Europe.
Yeah, this would be almost like an earthquake when it comes to European politics. Give us a sense of why her campaign has been gaining so much momentum. She's focused on the cost of living, on taking care of the ones that are suffering the most from inflation. Can Emmanuel Macron counter that? He's done a bit, actually, to try and you know, make that burden a little bit more livable.
No, the problem in France with this system where you have 12 candidates, but only 2 are making up for the second round, you have an immense power, if I may, or influence of strategic vote or useful vote, as we say in France, vote utile. And of course, it concentrates the votes of a certain constituency, and we have 3 major constituencies in France. When you make all the accounting, you see 32% extreme right. Sovereignist, anti-European, and so forth. You have 32 left, a very few, unfortunately, in many respects, I would say social democrat left, but you have also a lot of, I would say, radical left, obviously, and Greens, but the same percentage, 32, and the centrist, Macronist, pro-European, pro-market economy are representing also 32. I mean, the lesson of the election is really a division of the country between the 3.
Mr. Trichet, this means that it's going to be very difficult for Emmanuel Macron to be president without any doubt of his losing, because he doesn't have that buffer that he enjoyed in 2017. There was a lot of people having that anger vote, right? That either voted for Éric Zemmour, for Marine Le Pen, or even Jean-Luc Mélenchon.
At this stage, one thing is absolutely sure: it will be a close call, a very close call, and one can understand that because everything remains on the translation of the voters of the left, whether they will go as the leaders of the left are calling for, not to vote on Le Pen, implicitly or explicitly to vote for Macron. Will they follow this, I would say, recommendation, or whether they would split their votes? If they split their votes, it's an extremely close call. If they do not, then I would say there is a good chance, of course, that Macron will win with some margin.
So right now, do you worry about voters not going to vote, so the abstention? And how many people are still undecided that Emmanuel Macron or Marine Le Pen will try and win over in the next 2 weeks?
I think that a lot of people would, and this is new, accept that after all taken into account, even after the war in Ukraine, Le Pen would be a possible president. I think that it is not the majority view, but it's a strong view, which we had not 5 years ago. That being said, again, a very tough campaign is now coming in. The president did not really campaign before for many reasons, including the fact that when you have 11 candidates that are against you, it's very difficult to campaign correctly. But in the second round, it's 1-to-1, and I expect that I would say campaign will be very tough, and we will see exactly what happens. But I take it that normally, also taking into account the recommendations of the left, Macron should win.
Monsieur Trichet, thank you so much. I mean, we'll see if he really is managing to galvanize his campaign. Of course, Emmanuel Macron being considered by many French too elitist and a president for the rich. So we'll see if he manages actually to shake that off. Jean-Claude Trichet, former ECB president and Banque de France governor, stays with us. We'll talk a lot more about these rising yields. We'll talk about the U.S. treasuries and, of course, inflation globally. Coming up, we have more reaction for Mr. Trichet on the first round results of the French presidential election. That's next. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Marine Le Pen doing her victory speech in the first round here, as if she had almost already won this election.
Le peuple français s'est exprimé et me fait l'honneur d'être qualifié au second tour face au président sortant.
You can hear the supporters chanting behind me. The crowd here is chanting Marine President. They believe that this time she can make it. The first round results this Sunday show that Emmanuel Macron got about 28% of the votes and Marine Le Pen, the far-right contender, about 24% of the votes. So they will face each other in a runoff in 2 weeks' time on April 24. There's still a lot of things that Marine Le Pen needs to do in order to win this election, because in the past you've always had a Republican front going on for the second round of a presidential election, anything but the extreme. Tonight, Marine Le Pen has called all the French who didn't vote for Emmanuel Macron to vote for her. She would need to gather, of course, the far-right electorate of Éric Zemmour, this candidate who initially was a division in the far-right, but then has managed to make her look more mainstream because he was taking all the radical views on immigration and on Europe. So she appeared more normal, and she managed, thanks to Éric Zemmour, to gather a bigger electorate. She also needs to get some of the hard left voters, this electorate of Jean-Luc Mélenchon, who actually did a very good score tonight, about 20% of the votes.
Il ne faut pas donner une seule voix à Madame Le Pen. Il ne faut pas donner une seule voix à Madame Le Pen.
And finally, she needs the center-left voters of Emmanuel Macron to stay home in the second round. She needs the level of attention to benefit her for this second round. The biggest challenge for Emmanuel Macron will be to appear close to the French. Marine Le Pen has had this strategy of traveling up and down the country, meeting with the French, unlike Emmanuel Macron, who was too busy because of the war in Ukraine on the diplomatic front. She has cast herself as the president of the little ones versus Emmanuel Macron, the president of the rich. So Emmanuel Macron needs to refocus his campaign on this issue of inflation, which has become the #1 concern of the French, before immigration, before the war in Ukraine, and before healthcare issues. There will be a debate in between the two rounds on April 20 between Emmanuel Macron, the current French president, and Marine Le Pen. Last time, in 2017, Marine Le Pen wasn't very good in this debate. So this is a chance for Emmanuel Macron to regain control of this election after some polls actually showed a very tight race for the second round happening on April 24.
Bloomberg's Caroline Conan there reporting on the first round of the French presidential election. She was, of course, posted at Marine Le Pen's headquarters all evening. Now, let's get back to Jean-Claude Trichet. He's former ECB president and Banque de France governor. Monsieur Trichet, I want to talk about inflation worldwide, but first, in the next 2 weeks, what should be the strategy of each candidate? Is there, can Emmanuel Macron refocus on the ties that Marine Le Pen has had, for example, with Russia, and do the French citizens care?
Well, I expect both candidates, of course, to concentrate on the weak points of their adversary. The weak point of Macron is that he was in power for 5 years.
Yes.
And the experience in France shows to which extent this is a handicap, because you have to renew your own future and explain why you are doing better in the second term. Now, of course, Madame Le Pen has a lot of weakness also, and the main weakness is certainly to be anti-European, to be close to Russia and Putin, and to, I would say, have a program which is not financed.
Monsieur Trichet, there's a big repricing when it comes to treasuries. The 10-year U.S. yield, 2.75%, so it's getting higher. How difficult is it at the moment for policymakers to deal with inflation without tipping us into recession? You've lived us through this.
Yeah, I think that what is absolutely decisive, of course, is to continue to solidly anchor inflation expectations. If you solidly anchor inflation expectations, whatever happens with the hump of inflation, which is due to price of oil and commodity and gas and so forth, which is the case on both sides of the Atlantic, but if you keep under control, and it relies entirely upon your credibility. And the problem is to preserve credibility of the Fed on the one hand, of the ECB on the other hand, in a very, very difficult circumstance.
I mean, as soon as you say anchoring inflation expectations, it brings me way back. It's like, the fuzzy feeling when I used to cover all of your press conferences. Yeah. This is different because there's a supply shock. Yeah. There's a big supply shock coming from Ukraine and Russia. True. So how do you navigate this?
True. We had also supply shocks in my time, I have to say. When I left, my last year, we had 4% of headline. And 4% of headline means, of course, that you have a supply shock, and the price of commodities are picking up much too violently. But the problem, again, is to maintain the second round effects under control. And you have them under control if everybody is convinced that in any case, over the medium run, you will supply, if I may, 2%.
Yes.
Which is the common goal on both sides of the Atlantic.
But how much of a headache is this now for Europe? So we started the year in saying, look, there's an inflation problem in the U.S. There are cyclical effects in the U.S. that we don't have here in Europe. And suddenly, because of the proximity to China, the proximity to Ukraine and Russia, and the reliance on Russian oil and gas, it's a huge headache here that came up and cropped up violently.
You're absolutely true. We had already, before the war in Ukraine, a very big problem of price of oil commodity, agricultural product, which were much too high. And then we have, and of course, Europe is really at stake, this war in Ukraine and the dependency on oil and gas coming from Russia. So again, I think that we are more or less in the same situation now on both sides of the Atlantic because of this new hump of headline inflation due to the war. That being said, until now, inflation expectations were much better anchored in Europe than in the US. Up to now, I have to say, the core inflation in Europe was much lower. We were at 2.9% in the euro area, 6% in the US. So big difference before the full impact of the war.
Yes, and a difficult, I guess, cyclical moment also for the economy. Yeah. Talk to us about sequencing that the ECB needs to make sure that the markets get right.
I have full confidence in the Governing Council of the ECB, so I have no recommendations for them. But I would say the last decision they took were clearly mentioning the fact that they were very cautious, prudent, and wanted to signal that they would not remain excessively accommodating if there was an occurring of inflation expectations. So I trust them to continue to have this attitude, which is very important for markets, participants, for every I would say, economic agents, and for the social partners. They have to count on medium-term 2%.
Given what we're also seeing in China with concerns about growth, but also concerns about the COVID zero policy and what that means for trade, is the Fed now the central bank to the world?
No, no more than before. Of course, it is, the dollar is very important, no doubt. Proportion is 1 to 3 between the euro and the dollar, but I would not say that it changes everything.
Do you think the dollar dominance, because of what we're seeing in Russia and some of the sanctions, will slowly dwindle as more countries try and get away from it?
In the very long term, there is always a drawback with sanctions. And it is true that the United States has to be careful in practicing sanctions, including, I have to say, freezing the assets of central banks. That is something which I would not have recommended myself, frankly speaking.
Because it would backfire longer term, or because the second round effects are too big?
Because a number of other central banks would say, I'm not that sure that I can. So there is something there which is extremely delicate and has to be, I would say, priced in the decisions in Washington.
Monsieur Trichet, thank you so much, as always, for joining us. That was Jean-Claude Trichet, the former ECB president and Banque de France governor, joining us right here in Paris. Coming up, Rishi Sunak under pressure. The UK's chancellor faces scrutiny over his wife's tax status. That story is next. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Well, let's take a look at the front pages of some of the UK papers now. The Financial Times and Guardian leading with the French election. But the other big story in the UK is a scandal surrounding the Chancellor of the Exchequer, Rishi Sunak. Now, he's asked for a formal inquiry into his own financial interests. That's after it emerged that his wife took advantage of a legal tax loophole. Now, let's get more on all of this with Bloomberg's Leanne Guerin. So, Leanne, how precarious is Sunak's job right now?
Good morning, Francine, and that's a question on everybody's lips this Monday morning, and it's really damage control for Chancellor Rishi Sunak at the moment. He has requested personally that this investigation goes ahead into his finances, and this comes after we found out last week that his wife, Akshata Murphy, is a non-domicile, meaning she wasn't paying UK tax on the money she was earning outside of the country. And this comes at a time when the Chancellor Rishi Sunak has really been seen to raise taxes here in the UK. A lot of families are paying more tax than they ever did in decades. And the fact that we have now found out that his wife wasn't paying all the tax required due to her non-dom status, which is not illegal, but it is also not a good look for Rishi Sunak. Now, Rishi Sunak was tipped to be the next Prime Minister when Boris Johnson was going through the Partygate scandal here in the UK, and his personal polls were really surging. We have seen those plummet now, but there's damage control in Downing Street as he tries to claw back some of his popularity.
Leanne, thank you so much. That was Bloomberg's Leanne Guerin. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kay Lines in New York, Anna Edwards here in London, and I'll be bringing you the very latest from Paris. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
There are certainly a lot of moving parts that have created a lot of price volatility.
It picks up, it slows down, but a real true recession we just don't see right now.
Barring adverse developments, I think we have a little bit of breathing room for the equity markets.
Unfortunately, we're not in the perfect world.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Macron and Le Pen are set for a runoff election in France. It's a vote that will reverberate across Europe. Ukraine expects Russia to widen its offensive in the eastern part of the country. Meanwhile, a new Russian ground commander is raising alarm. And Elon Musk turns down the chance to join Twitter's board. That renews speculation about the company's future. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And Kaylee, the focus for markets on the higher yield environment, on the data out of China, and on French politics.
Yeah, and all of it adding up to what was a very, very risk-off day in Asia overnight. Broad selling across the board, but a lot of the pain was centered in Hong Kong and China specifically, and specifically within technology. The Hang Seng Tech Index fell more than 5%, while the broader CSI 300 in China was down by about 3%. And we actually had reporting out just about an hour ago from Bloomberg saying that Chinese authorities actually stepped in to try to stem the bleeding, stopping mutual funds from selling some shares, but it didn't actually translate into much of relief for those stocks, which were down pretty hard. Of course, you have a lot of factors at play in that. You have a consistent regulatory overhang on technology, but also a lot of macroeconomic concerns. You have continued lockdowns in Shanghai, other areas of the country due to a COVID-19 outbreak. What does that mean for growth? And of course, that also exacerbates inflation. We saw that in the factory gate inflation data overnight, 8.3% higher than expected. I wanted to point to the Chinese 10-year bond yield as well. 277 is where we sit currently. At one point in the session, that actually surpassed that of the 10-year Treasury yield for the first time since 2010. And as we see Treasury yields climbing, that is once again putting pressure on the Japanese yen, back through 125 against the dollar, Matt, weakest since 2015.
Yeah, watching that yen and also that Chinese inflation. Of course, we have our own inflation numbers coming out on Tuesday. What we're really seeing today is the effect of yields, the 10-year right now at 275 basically, on stocks. S&P futures down about
0.5%, a little bit more, and getting lower and lower as we head towards the open. NYMEX crude right now down about 2.33%, 95.93 a barrel for Texas Intermediate. So that may be good news for U.S. stocks, but still, we're watching that yield, that 10-year yield and real yields continuing to climb. Bitcoin right now down as well, more than 2%, 42,183. And the question is, how closely correlated is Bitcoin really to the S&P 500, to the NASDAQ 100? The concern is that it's very correlated, and we could see a correction coming. So, Anna, European markets, are they telling a different story than what we're seeing here?
European markets are broadly nervous about the higher yield environment that you've just mentioned there, Matt, and we are seeing moves here in Europe that really sit very well with what we're seeing on U.S. futures. And in fact, the European session has been moving up and down with that U.S. futures picture connected to the higher yield environment in the United States. There are other stories we need to focus on here, though, in Europe, and one of those is France. This has been a really volatile market this morning. The CAC 40 has been positive, then negative, then positive again. And it is, of course, about the French election, but it is also about what we're hearing from Société Générale. So here's CAC 40 up by 0.4% right now. SocGen, one of the French market's biggest banks, they have announced what they're going to do with their French assets. They're managing to sell them to Vladimir Putin, who is a very lightly sanctioned Russian billionaire, and he's going to be buying these assets. The fact that they're actually managing to sell Russian assets at this point, and they're sticking to their buyback plans and their dividend plans, that being well received by the market. That stock up by nearly 6%. It has been a little higher. I put the French 10-year yield in here as well, because we did see this yield moving a little bit lower in the very early start of trade in response to the French election, the fact that maybe Emmanuel Macron did better than some had expected him to, even if that race now looks interesting over the next couple of weeks. More on that in a moment. But now, in the last few hours, we have seen the French markets kind of fall in line with the broader international picture, and one that the German market is reflecting here, and that is a higher yield environment. Let me show you what's going on in Russian assets. Last week, we saw a 6% contraction or retraction in the stock market over in Russia. Today we see moves higher at 0.7%. The ruble continues to re-find its feet, really. Capital controls limiting the damage to the ruble after we saw it jump out to, what, 177, I think, to the dollar, now around the 80 ballpark, so not all that far from where we were when we saw the start of the war. Keeping an eye on what's going on with Russian debt, of course, Russian CDS. As we saw, the Russian finance minister said that they will take legal action if it is sanctions that mean that they have to default on their debt. Of course, they say they haven't defaulted. We will wait to see how other bodies, other agencies decide the Russians have behaved in terms of their debt payments, Kaylee.
Well, and we're getting news on that right now, Anna. We just had a breaking headline that Russian Railways has been declared in default. A CDS panel has ruled. That's the Credit Derivatives Determinations Committee, saying that insurance contracts for that will now be triggered and paid out to holders after the company missed a coupon payment last month. So again, Russian Railways is in default. It'll be interesting to see how many potentially will follow. Now let's take a look at what is ahead this week. Today we have EU foreign ministers meeting in Luxembourg with additional measures against Moscow on the agenda. Then on Tuesday, we'll get the all-important U.S. CPI data. On Wednesday, JP Morgan will be kicking off Wall Street earnings with many big banks to follow. We'll also get the ECB rate decision on Thursday. And finally, rounding us out on Friday, Matt, U.S. industrial production data.
All right, we're watching that data very closely this week. Over in France, Emmanuel Macron set to face his nationalist rival Marine Le Pen in the final round of the French presidential election. Snap polls taken after voting ended gave the 44-year-old president a narrow advantage heading into the runoff on April 24th. The candidate spoke last night.
I wish to extend a hand to all those who want to work for France.
All those who today didn't vote for Emmanuel Macron should join our movement.
They are able to decide what's good for the country. Never lose your faith in democracy. So you must not give a voice to Madame Le Pen.
I'm calling on my electors to vote for Marine Le Pen. The game isn't over, and the debate that we will have in the coming 15 days is decisive for our country and for Europe.
Bloomberg's Francine Lacroix is leading our coverage in Paris right now, and the world is watching. Francine, markets have taken this as good news. Is there a danger?
Well, I think there's a danger of complacency, Matt. There's a danger that actually the markets look at the runoff between Marine Le Pen and Emmanuel Macron and see a repeat of 2017, but actually we're in a very different situation. First of all, Marine Le Pen is stronger when it comes to the economy. She's tapped into something that is extremely important, which is the high cost of living, inflation, and how she intends to actually protect the blue-collar workers, whereas Emmanuel Macron is really considered out of touch, a president for the rich and for the elite. The other thing is because Emmanuel Macron has been in charge for 5 years, it will be much more difficult for him to have the buffer. So April 24th, the two candidates have a runoff, but I think polls will be extremely tight.
Francine, when we look at the number of votes that went to Marine Le Pen and the number that went to Eric Zemmour, what does it tell us about deep divisions within France?
Yeah, the divisions are deep because you can call them the anger votes, but you also take Jean-Luc Mélenchon, who did 20%, the third candidate with the most votes. He's far left, and what we found out in the last 4 to 5 years is that there is more of a link between far right and far left than there had been in the past. So the traditional left-right divide is now out the window, and it's more of a vote of establishment and anti-establishment, and that really cemented in what we've seen over the last 4 to 5 years. What will be crucial on April 24th will be turnout. We have a TV debate on April 20th. It'll be interesting to see both sides try to attack each other on various things. I suspect that Marine Le Pen will say Emmanuel Macron is out of touch because he only takes care of the people that are wealthy. I suspect, by speaking to campaign managers on both sides, that Emmanuel Macron will go after her close ties with Vladimir Putin in the past. So it will be an interesting and definitely not dull campaign in the next 2 weeks.
All right, Bloomberg's Francine Lacqua in Paris, thank you so much. Speaking of Vladimir Putin and Russia and the war in Ukraine, let's get the latest there now. Ukrainian President Volodymyr Zelensky said he expects Russian forces to widen their offensive in the east of the country as they abandon parts of the north. He spoke yesterday.
Russian troops will turn to even more large-scale actions in the east of our country, may use even more missiles and air bombs against us.
Let's get to our team coverage now with Maria Tadeo, our European correspondent who's in Luxembourg, where EU foreign ministers are meeting today, and Anne-Marie Horder and Bloomberg Washington correspondent with us from D.C. Maria, let's start with you. Give us the latest on your side of the Atlantic.
Well, Kaylee, we have European foreign ministers today. They just approved a new package of sanctions, but they're already working on the potential new one that could maybe include oil. We know that's being debatable. Having said that, getting that on paper will be very difficult. We know that this continues to be a very divisive issue, but all of this is happening in anticipation of what is being framed as a battle for Donbass. Both sides, Russia and Ukraine, prepping for a major battle. There's two issues here, of course. For the Russian President Vladimir Putin, he is fast approaching Victory Day. That's May 9th. He needs to be able to show his public on the Red Square that he's achieved something. That is a date in which the big Soviet victory over Nazi Germany celebrated. And remember, this operation is happening in the context of a denazifying operation. That's what the Kremlin says. When it comes to Ukraine, they feel that if they're able to repel the Russians on the east, then that will give them a lot more leverage and a lot more power when it comes to the real talks. Remember, the Ukrainians say they won't actually sit down and talk seriously until there's a ceasefire. They believe the best way to achieve this is by really going after Russia in the east.
Okay, so that's what's happening on the ground. In terms of talks, in terms of who is talking to whom then, Maria, Austria's Chancellor will meet with President Vladimir Putin in Moscow today, we understand, in an attempt to build dialogue as the war in Ukraine continues. The Austrian Foreign Minister, Alexander Schallenberg, spoke to Bloomberg earlier, and here's what was said.
If we can do anything to stop this humanitarian hell that is happening in Ukraine, we will do so. Do we expect miracles? No, we don't. But we cannot tell ourselves that we left a chance unused, that we left a stone unturned if we could have done so.
Maria, so we expect this visit by the Austrian Chancellor today, not somebody with such a high profile around the European political scene. What can Karl Nehammer, the Chancellor of Austria, what can he hope to achieve?
Look, Anna, the way I see it, there's very little upside from this meeting, and a lot of things can go wrong here. When you look at the Austrian Chancellor, he's been in the job
for 2 months, doesn't have a lot of foreign policy credentials. When it comes to Vladimir Putin, we know those meetings can be very difficult, and in particular, the press conferences that follow can be brutal. This has a lot of potential to go wrong. The Austrians, nonetheless, they say that this is a peace mission, that they're doing this to try to show Vladimir Putin that he's very isolated in the global stage. But as I say, a lot of this carries a lot of risk, and today there's a lot of nervousness around this visit. I had a European official who told me this is not the time for amateurs, so we'll have to wait and see what happens there.
All right, Maria Tadeo in Luxembourg, thanks very much for that continued coverage. Now, President Biden will again press India to take a harder stance on Russia's war in Ukraine during a virtual meeting with Prime Minister Narendra Modi today at 11 a.m. Eastern Time. This meeting comes ahead of a dialogue between the foreign and defense ministers from both sides. Let's get to Anne-Marie Horder. She is standing by in Washington. So, Anne-Marie, what do we expect President Biden to say?
Well, there's a lot of growing unease between New Delhi and Washington. Now, what we heard already from Jen Psaki, the president's press secretary, over the weekend was that President Biden will continue, in their words, our close consultations on the consequences of Russia's brutal war against Ukraine and mitigating its destabilizing impact on global food supply and commodity markets. I wanted to bring this quote up specifically because India's statement ahead of this virtual meeting does not mention Ukraine, the war in Russia, issues with commodities, wheat prices, and oil as well. And these are two of the big issues because right now, Russia is taking in, at steep discounts, a lot of Russian crude. On top of that, they're also looking potentially for ways to pay for that crude in rubles. And then, of course, there's the fact that India is a massive military buyer from Russia. So you have two of these big issues. Behind the scenes, though, what people say is that there are a little bit of better talks about making sure India can more align with the West. But what you see in public is a lot of warnings. We saw that last week from Brian Deese, the president's top economic advisor, to India about if they have more strategic alignment with Russia. And from the Indian side, what we saw just last week was then abstaining once again when the UN General Assembly voted to oust Russia on the Human Rights Council.
Anne-Marie, thanks very much. Anne-Marie Horder in Washington for us. From Washington to tech news, Tesla founder Elon Musk has decided not to join Twitter's board. The reversal has set off speculation about the reason for Musk's decision. Let's get more with Bloomberg's Danny Berger. Danny, what do we know?
Well, this came about 6 hours ago, a tweet from CEO Parag Agrawal saying that Elon's appointment to the board was to become official effective the 9th of April. But Elon shared that same morning that he will no longer be joining the board. I believe this is for the best. So the day he was supposed to join the board, he doesn't. And this, again, just 6 hours ago, has fueled the speculation as to why he decided not to. And each of these reasons really does come with an effect, not just for Elon's holding of Twitter itself, but also SEC action. So first off, shares have been falling pre-market. They're off some of their lows, down 4.5%, was down as much as 6%. Of course, a lot of investors love everything Elon touches. But if he had joined the board, part of the stipulation was he couldn't own more than 14.9% of Twitter. Currently, he owns around 9%. So if he's not joining the board, therefore, he'd be free to buy and acquire a much bigger stake. Secondly, if he was on the board, fiduciary responsibilities would have come with that. And perhaps then he wouldn't be able to have his controversial tweets about Twitter, of which there have been many just in the past few days. And finally, Elon Musk also not only filed late about his holding to Twitter, but also first filed as a passive investor. Yeah. There's a lot of speculation that he'll find SEC scrutiny with that. And Kaylee, joining the board would have just made that all a lot more complicated.
All right, Bloomberg's Danny Berger, not so passive, clearly, as we've come to understand over the last week. Now, of course, as Danny mentioned, Twitter lower in pre-market trading, but Tesla, the company Elon Musk is the CEO of, also is lower. That stock is down the better part of 4% at the moment. Remember, Tesla commands a very, very high multiple. Trades at something like 93 times forward earnings. And as you're seeing Treasury yields going higher, that is putting pressure on a lot of those high multiple stocks. One of them as well isn't just technology companies based here in the U.S., but based in China too. Of course, I detailed earlier the pain we saw for some of those Chinese technology stocks overnight. That is translating right through into the ADRs in pre-market trading this morning. Alibaba, just one example, it's down almost 4% as well. And of course, it's not just technology moving lower. The energy complex is by and large as well, as you're seeing oil prices put under pressure by some of the concerns around demand from China. Occidental Petroleum, one example, down about 2% before the bell, Anna.
Yeah, interesting that energy stocks here in Europe are flat, Kaylee, but we do have technology moving substantially lower, down by more than 2% in the European session. What does Sharon Bell, European equity strategist at Goldman Sachs, what does she make of the technology space as we see yields go higher? That's certainly part of the story here in Europe and looks to be part of the story as we move into the US day as well, with NASDAQ futures weaker. And onto the French runoff, we will talk to Douglas Weber, INSEAD Professor of Political Science. We'll get perspective on what we've heard so far and have yet to still hear from Paris. Plus, trouble getting off the ground, billions of dollars, and a decade later, and Amazon's delivery by drone program continues to be plagued by crashes and safety concerns. Read more on today's Big Take by typing NI Big Take into your Bloomberg terminal. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both radio and television. I'm Matt Miller here in New York with Kaylee Lines. Anna Edwards is with us again in London, reunited, and it feels so good. I'm looking at credit chart right now that doesn't make you feel good if you're long, if you've been long. Obviously, it was a horrible first quarter for credit, really across the board. For those of you listening on radio, we're showing treasuries, corporate debt, govies, global act securitized debt. All of it had just an awful first 3 months. Dana Al-Baltaji joins us now, Bloomberg Managing Editor for Credit, to talk about what we can expect in Q2 and going forward. Dana, especially with the run-up in rates that we've seen in the 10-year, what does this mean at 275 for the rest of credit?
Hi, so basically, I think you should expect more of the same. You know, the narrative hasn't really changed. Yes, we had Russia and it blew up markets, but right now the discussion really is about rates and rising rates. And that is not going to go away. Inflation is still very high, and you should expect to see bond yields to still be rising. What's really interesting about that chart, though, is the pace of the fall. The pace of the fall has been so frantic. I mean, if you look at that chart really carefully, you'll see that it was falling falling from the end of July, beginning of August. But since the beginning of this year, it's just been absolutely frantic.
And where would you stand on the, good morning to you, Tony, where do we stand on the real yields story right now? Because we've seen them in negative territory for so long, and all of these fast moves in nominal yields actually taking us back up to territory we haven't seen for some time, and that's positive.
And that's exactly it. I mean, I think what we are seeing is a return to a normal that we had back in 2019 and 2018. The thing is that while we did expect this, I mean, of course, rates are rising and you would expect yields to rise and therefore the real yield to go into positive territory. What we did not expect is how fast that is all happening. And the question is whether or not the corporates out there and whether the people out there are actually ready for this sort of pace.
Yeah, absolutely. The pace of change, quite frantic then. Dana, thank you very much. Dana El-Bartaji joining us there with the latest on rates markets. And for more market analysis, check out MLIV Go on your terminal. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's a Monday morning that follows a weekend of golf. Scotty Scheffler is the new Masters champion. He won the tournament by 3 shots over Rory McIlroy. Scheffler has won 4 of the last 6 tournaments that he's played. Meanwhile, Tiger Woods finished 23 shots back. It was his first tournament since an auto accident that almost cost him his right leg and his life. At times, he used a golf club like a cane for support. And we understand that Tiger Woods being back in the tournament actually was a big boost to viewership, according to ESPN. Now, coming up, we will get away from sports back to the market. Sharon Bell, European equity strategist at Goldman Sachs, will be joining us on this Risk Off Monday morning. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. In France, President Emmanuel Macron and nationalist Marine Le Pen are headed for a runoff in the presidential election. It's a rerun of their 2017 contest that will reverberate across Europe. Macron received 27.6% of the vote in Sunday's first round, compared with 23.4% for Le Pen. Ukraine's President Volodymyr Zelensky expects Russia to turn to even more large-scale action this week in the eastern part of the country. He has been warning for days of a new Russian offensive. And it's another twist in the week-long saga of Twitter and Elon Musk. Twitter says the world's richest person has decided not to join its board after all. That touched off renewed speculation about the company's future. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, here in Europe, we're focused on French politics, but clearly also focused on the global yield story.
Yeah, absolutely. And actually, Dana Al-Baltaji, who was just on with us, kind of confirmed my suspicions that the yield rise, especially the pace of it, is just kind of freaking people out. The 10-year yield right now at 274.20. This is the highest that we've seen it since, I believe, January of 2019. And it's really the speed at which we've gotten to this point that's pretty shocking. S&P futures are down about 0.5% right now, so it's not totally wigging out markets, but to some extent it's just throwing things off kilter. NYMEX crude down 2% to 96.26, so Texas Intermediate off about 2%, and Bitcoin down about 2.5%. Really, if you look at a 20-day correlation, I think you'll see an incredibly positive correlation, Bitcoin to S&P, Bitcoin to NASDAQ 100. So that's why we see it down. Kaylee, what do we see in terms of pre-market movers?
Well, there's really one story in particular I want to focus on first, Matt, and that is Twitter. The saga continues. Elon Musk no longer going to be joining Twitter's board. He has actually rejected that offer. That frees him up potentially to increase his stake to more than the 14.9% that was agreed when it was thought that he would join the board. It raises some questions about what exactly his ambitions are when it comes to this company. All of that adding up to a loss for Twitter in pre-market trading of about 4.25%. You also have Tesla, of course, a company which Elon Musk is the CEO and founder of, down by about 3.7%. Really broadly, some of those big technology companies that enjoy higher multiples are being put under pressure by the higher yields you were just speaking about, Matt. That includes NVIDIA, Microsoft. They're down 2.5% and 1.3% respectively. Though for NVIDIA, a bit of a double whammy today because it was also cut to neutral over at Baird, a $225 price target, and that is exactly where it's trading in early hours this morning, Anna.
Tech stocks also a focus here in Europe then, Kaylee, because of that higher yield environment, because of what we're seeing in real yields. We see tech, one of the most under pressure sectors here in the European session today. That is weighing on the Stoxx 600, down by 0.5% at this stage of today's trading. The CAC 40 in Paris outperforming, and yes, we're focused on the politics, but it isn't all about that. It's also about Societe Generale deciding to sell their assets in Russia and actually finding a buyer that they're able to sell to at this point. And despite the hit, the write-down they're going to take on that deal, they are saying they're going to stick to their buyback plan and stick to their dividend plan. So all of that well received by investors. And this, back to the higher yield story, that's what's dominating, even in France, where we did see a different story in the early hour of trade, the first hour of European trade today, but now falling in with the pack, and higher yields across Europe joining the higher yields across treasury markets. That's the focus for global investors, of course. Let's focus on Russian assets and give you an update there. We saw a 6% pullback in Russian stocks during last week. Today, we see a bit of a move to the ups, into higher territory, up by 0.6%. We've seen that the ruble has been as weak as 177 during the height of the early weeks of the war. The war still rages, but the ruble has, of course, been shored up by capital controls introduced by Russia. And the Russian 10-year bond yield, to put that in here as well, because we have had comments from the Russian finance minister saying that they would take legal action if they thought that it was sanctions that stopped them from paying their debts internationally. A story we continue to watch.
The ruble also, I think, Anna, may be shored up by European countries continuing to pay Putin for gas and oil at an exchange rate of his choosing. Never hurts. Joining us right now is Sharon Bell, Goldman Sachs Managing Director of European Equity Strategy, to talk about, what's going on, Sharon, in terms of markets, the climb that we've seen in yields and the speed that we've seen with that climb. What does that do to the way you look at your investment strategy, the way you look at European equities?
Yeah, I completely agree. It's been an incredibly fast climb in yields across the whole spectrum. Short-term interest rates going up, longer-term expectations for inflation and interest rates going up. So you've had a huge sell-off in the bond market. And the speed is a problem for equities. When it happens incredibly fast, equities often find that quite difficult to digest. So we are generally seeing equities react negatively on days where yields are going up. That being all said, you're not seeing a collapse in equity markets. And I think that reflects the fact that equities are a kind of real asset. In other words, unlike bonds, dividends should grow over time with inflation. And that gives them a little bit of a hedge.
Yeah, I mean, I hate to say, Tina, but there isn't much of an alternative, right? Other than commodities, where are people putting their money?
No, absolutely. And you are still seeing generally positive flows into equity. And I think the reason for that is exactly this point. There's no alternative. You can put your money in cash, but that will be negative in real terms. You can put your money in bonds, but they're highly volatile at the moment. And with this big sell-off in bond markets, it doesn't look particularly attractive. Commodities, absolutely, but that tends to be quite a small market and something which is quite difficult for most investors to invest in. So equities gives you yield, gives you potential growth. Some stocks are very correlated with this rise in commodity prices too.
And Sharon, if you're thinking about inflation hedges, is the commodity space still the place to look? And if so, is it about the underlying asset, or is it about stocks that maybe haven't reflected some of the moves we've seen in the underlying?
Yeah, both absolutely. I completely agree with that. I think energy stocks or mining companies, and Europe has a fair share of those, which is the area that I cover. Those companies, a great hedge if you're worried about higher inflation, a great hedge if you're worried about higher commodity prices. And these are not expensive sectors or areas. They've generally been ignored in recent years because they don't score well on ESG criteria, but they actually offer incredible cash flow yields. This earnings season is likely to be good for these stocks too.
Sharon, what messages are you taking from French assets this morning? We see the CAC 40 move higher this morning, but that's not necessarily all to do with the French election. There are other things in the mix there. We've seen the bond market kind of fall into the same narrative that we're seeing internationally. What messages are you taking away from the first round into the second when it comes to the European equity strategy?
So I think that the likelihood of Le Pen getting in, which of course is the concern that the market might have, and to the extent that any chance of Le Pen getting in rises, that always concerns risk assets in Europe, like equities, like the currency. But I think that the chances haven't gone up with this first round result. You know, if you look at the sort of odds betting markets, probabilities, they've gone down a tiny little bit. Maybe that's some of the reason you're getting a slightly positive reaction by the CAC. But as you say, it's not just that. It's not going to be the only factor that influences French assets.
Well, Sharon, of course, one of the critical issues in the French election is the cost of living crisis, and that isn't just an issue in France, it's across all of Europe, the UK as well. And as consumers face these higher costs in their daily life, are you worried about the implications that may have for companies' pricing power and the ability to pass costs on?
Absolutely. I mean, this is the focus of the media, but absolutely it's the focus of markets too. You've seen more consumer discretionary areas of the market sell off in recent weeks, and I think that's exactly right. That's a true reflection of what's likely to go on. Consumer sentiment has fallen. Consumers will see energy costs and food price inflation rise quite dramatically. You're already starting to see that, but there's more to come through. In certain countries, you mentioned the UK, you've got interest rates rising, you've got taxes rising, and all those things will knock real incomes. So a substantial hit, I would say, to demand for consumer discretionary areas. That all being said, it is a little bit balanced because a lot of consumers have savings built up from the pandemic. And there is some reopening demand as well. People want to travel, people want to spend a little bit of money to the extent they have it. But even so, I think that there's a hit to those types of companies, which is another reason to buy the companies that perhaps benefit from these rising prices, like commodity areas.
Well, as we talk about consumer and potential demand destruction, I'm wondering, Sharon, where you put the odds of a recession in Europe and if you think the market is adequately priced for that risk.
Yeah, it's tricky. We've actually got in our forecast for this second quarter, the one we're in at the moment, a contraction in GDP. Now, I know the kind of technical definition of recession is you have to have two negative sequential quarters. So, but I think there's going to be a good chance we've got a contraction in the second quarter. If these high prices persist into the third quarter, for example, there's more of a hit to real incomes through the summer and into the early autumn. All of those things could mean a recession. So, you know, you've got to think that the chances are reasonably high. If it's a bit less than 50%, it's still probably much higher than it would be typically. We do have a contraction in the second quarter rather for GDP.
Sharon, thanks very much. Sharon Bell, Goldman Sachs, Managing Director for European Equity Strategy. We will stick with the European focus coming up on the programme. We'll be live from Paris. We'll be talking to the French about the French election with Douglas Weber, INSEAD Professor of Political Science. This is Bloomberg.
biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, President Emmanuel Macron is set to face his nationalist rival Marine Le Pen in the final round of the French election. It's a rerun of their 2017 contest that will reverberate across Europe. Let's get back to Bloomberg's Francine Lacqua, who is in Paris. She's standing by with Douglas Weber, professor of political science at INSEAD. Francine, over to you.
Yeah, thank you so much, Kaylee. Thank you. I'm delighted to be joined by Professor Weber to talk about the implications and actually the probability of Marine Le Pen becoming president. Given where we are in the polls, given the dynamics of 2022, very different from 2017, what probability do you attach to Marine Le Pen becoming president?
I would estimate that right now the probability that Le Pen becomes president is probably about 1/3. That's to say it's more likely than not that Macron will win. He has around 4% more votes than Marine Le Pen from yesterday. Yeah. Plus, he has the support of most of the other candidates who were eliminated in the first round yesterday. However, I mean, we're 2 weeks away from the second round.
And anything can happen.
A week is a long time in politics.
Two is double that.
Mrs. Le Pen developed a lot of momentum in the last weeks of the campaign. The result is open.
Yeah, talk to me a little bit about if Marine Le Pen becomes president of France, what does that mean for Europe? What does that mean for foreign policy?
The implications would be massive, really major. In her speech last night, Mrs. Le Pen said the French voters were confronting a fundamental choice of society and civilization. And in this respect, she is not wrong, because if she were to win the election in 2 weeks' time, this would have a massive impact on French foreign policy, its role in Europe, its role in NATO, and for European security. I'll give you some examples. She proposes to withdraw France from the military command of NATO. Yep. She proposes to reinstitute the primacy of French law over European law, which means she would basically side or be allies of Hungary and Poland in the European Union. Plus, she also intends to downplay and to downgrade the relationship with Germany, which has been the historic core of the European Union.
And Professor, you don't think that she'll walk down on some of the things that she said to be more palatable to a European electorate in the next 2 weeks?
She might try to do that in order to win over votes, but the question is how credible would she be? Of course, after the war in Ukraine began, she criticized the decision by President Putin, but she has a long history of a close relationship with Putin. And despite the Russian invasion of Ukraine, nonetheless, in her election program, which she has not reneged upon, she has proposed that France develop an alliance with Russia to manage the great European security issues. One wonders what she has in mind. But she also is talking about the role of Russia in the Middle East and also North Africa.
Professor, good morning. She's focused a lot of her campaigning in the first round of this race on the cost of living. Is that going to be the same in the second part? Do you think she'll try and keep things domestically focused?
Yes, she will, because this is her strongest card. She was, I think, very effective and very shrewd over the last few months in focusing on issues of the cost of living and living standards in France, more so perhaps than any other candidate. And particularly after the outbreak of the war in Ukraine and the discussion and the impact of the war on, and likely future impact of the war on food prices, on petrol prices, and so on. This was actually, and given the concerns of many French voters about these issues, this was actually a very clever ploy. And
Professor,
it's not one to which President Macron has very well responded so far.
Okay, and so maybe he will try to talk about more of that in the next part of the campaign. How divided do you see France as right now, Professor? If you could maybe sort of relate that to the more international scene. We've seen, if you add together the number of votes for Le Pen and also for Zemmour, quite a sizable chunk going to the far right here.
Yeah, France is a deeply divided society. It always was in many respects, but it was historically divided along the lines that primarily of social class. And there was a strong left-wing party or parties, and there was a strong mainstream right party, which differed on issues of distribution and social class and so on. Nowadays, the main cleavage in French politics is around identity, values, and France's place and relations with the outside world.
And Professor, what are the links between the far right and the far left today? Jean-Luc Mélenchon getting 20% is not insignificant. Who will those votes go to in the second round?
I think they'll probably go, most of them, those that are cast to Macron, because last night, and in contrast to his stance in 2017, Mélenchon made it very clear to his supporters they should not vote for Marine Le Pen. He did not say they should vote for President Macron, however. So I would expect of his supporters yesterday, quite a large proportion will abstain in 2 weeks' time, and of those that are left, more will vote for Macron than for Le Pen.
I was going to ask you how much of a challenge and how much effort will both candidates put into getting people out to vote for them, but just getting out to vote on April 24th?
This will be one of the main challenges, of course, and particularly there will be a competition for the support that yesterday went to Jean-Luc Mélenchon. But I think the probability that many of his supporters will abstain is actually very high.
All right, Douglas Weber, professor of political science at INSEAD, speaking with our own Francine Lacroix in Paris. Thank you very much for that. Really great insight into the French election and to the French economy and political system. Now let's get to something completely different in the world of crypto. The co-founder of trading platform BitMEX says the rout in tech stocks could prompt Bitcoin to fall to $30,000 by June. Arthur Hayes says Ether could also slump. His warning comes as Bitcoin's correlation with tech continues to rise. The increase further erodes the argument that Bitcoin works well as a diversifier. For now, it's one that's been, that argument been held up by proponents as a key to its appeal, but of course we're only looking at a 20-day correlation, and these things can be massaged in any which way. Nonetheless, for the moment, it looks like very correlated, and that's a problem if you see stocks, especially tech stocks, going down.
Yeah, exactly. And if you're long of crypto, then so we see that strong correlation. And yes, these things can be massaged, but it does look a pretty strong correlation between the two, doesn't it? And we've often remarked on how they've moved together, Matt. But perhaps they're both a function of something else, and that is loose central bank policy and low interest rates. And perhaps they're both responding to the same driver.
Yeah, no, 100%. And this is something I'm really excited to talk about with Sam Bankman-Fried. He joins us tomorrow on Bloomberg Crypto. Of course, that's our show every Tuesday at 1 p.m. New York time, 6 p.m. in London. We will speak with the 30-year-old billionaire, FTX CEO and founder, Sam Bankman-Fried. Always great to get his insight. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The war in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Now, let's take a look at the important issues to watch. And first and foremost, Anna, I'm going to say that CPI out tomorrow is going to be a huge issue for markets, especially if we see it come in at 8.4%. But that isn't for another 24 hours or 27 hours. So in terms of what we're watching today, I'm really focused on Austria's meeting with Putin in Moscow. The Chancellor of Austria, the new Chancellor of Austria, Nehammer, is going to meet with Putin. He'll be the first Western European leader to go to Russia after the war started. And it'll be interesting to see if he can get any results, considering how new he is to the office and the fact that they're not a NATO member. Maybe that's why he's gotten easier in there, but it's going to be more difficult for him to get traction.
Yeah, in that sense, yes. Interesting that he's making the visit, that he sees a role for himself in doing that, and we will watch that with interest. I'm watching what's happening in France, of course. We've been tracking the first round of the French presidential election, and we saw that Macron got more of the votes than Le Pen, but the gap was maybe wider than it had appeared. Maybe some market participants who were long risk assets were nervous about this on Friday, but actually then maybe Macron doing a little better than those Friday nervous expectations has allowed the CAC 40 to rally a little this morning. But it's interesting to look at how assets are responding here. We see, yes, the CAC 40 moving higher, Matt, but there's the SocGen story in here, which is a little bit separate. So Societe Generale up by 7%. This on the back of their ability to sell, to offload a Russian asset, which is in itself pretty interesting. They found a billionaire who is not sanctioned sufficiently. He is by Canada, but not by many other places. So they are able to do this kind of deal and commit to their buybacks at the same time.
Well, I mean, at a loss of what, 3.3 billion euros?
Yeah.
I mean, I feel like I could sell anything at a loss of 3.3 billion euros. You know, it doesn't seem like that much of an achievement.
Right, but getting deals done with Russian assets, I suppose, given the global climate and the sanctions environment we're in, maybe that's something. We will continue to watch those stories. As Matt rightly says, we will definitely home in on the inflation story as we go through this week, because yields are on the rise this morning. 2.75% is the yield on the US 10-year. We continue to focus on the inflation story globally. That is it for the early edition. Surveillance lies ahead. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Part of the reason why growth is going to be slower is that the Fed is trying to slow things down.
The Fed seems to be a little bit more concerned about inflation than I would have anticipated.
There's a real concern right now about a slowdown that is consumer-led.
Demand needs to be slow. It's simple supply and demand here, right?
I don't think the market has quite made up its mind whether it's going to be a recession or just, quote-unquote, a growth recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Welcome to a Monday of jump conditions. No other way to put it. We welcome all of you on radio and television. Kaylee Lyons in for John Farrow. And Lisa, it's real simple. It's not a normal Monday. There are jump conditions in the market.
And they're being driven by inflation expectations by a Federal Reserve expected to respond to them on the eve of CPI Tuesday, which is what we're going to be talking about tomorrow. Honestly, the 10-year yield, shocking. And not just that, but the real yield heading that much closer to zero as we move toward potentially not only a normalized Fed, but a restrictive Fed.
And Lisa, in this incredible week of earnings and our travels to Washington for the meetings of the International Monetary Fund and the World Bank, to me, what's so important is to see the correlation of movements. Today, Japanese yen ever weaker.
Honestly, to me, it has been shocking. This has been a sea change globally with yields not just in the U.S., but also in Europe. And it's now a race to see who can tighten most quickly, who can restrain inflation at a time when a lot of the inflationary pressures from the war in Ukraine to what's going on in China do not seem to be abating.
And Kaylee, what's so interesting here is that the distractions of the weekend, yes, the Masters in golf, and yes, of course, the French election, our Francine Lacroix and Caroline Conan in Paris. But what's absolutely fascinating to me is how Washington responds, particularly to the threat of further war in Ukraine.
Well, and we know that President Biden is going to be addressing that with India today, speaking with Prime Minister Modi at 11 a.m. Eastern time. India, along with China, one of the countries that has not come out and directly criticized Russia for its invasion. There's obviously the economic relationship when it comes to energy, but military as well. So it'll be interesting to see what the readout is of that virtual meeting between those two leaders later on today, Tom.
Lisa, we got to come off the pandemic lows in scope and scale here, and I want to go to your credit market analysis. The 10-year yield off the February 2020 low yield is up 400%, up breaking out today to new highs, 2.75%. We see it in many other things as well, including gold with another lift.
Hello, traders. How are you today? It's time to sell Bitcoin. As you can see, we hold Bitcoin position at 42,283. Right now, it's time to sell and I'm placing a stop at 41,860. Okay, 41,860. Please place your stop for Bitcoin, so you will not lose any money. This is 1% below the price we sold Bitcoin. It was about a week ago. We didn't lose any money at all, because for more experienced people, you're supposed to know that if you sell short Bitcoin, especially a contract for difference, broker pays you overnight money, basically, for holding overnight. Okay, and another we will show for newbies price where we sold short at 42,283. Okay. Okay, so this is the price, 1% from 42,000 to just 1 second, 42,000 to 83 will be 41,860. Okay, guys, stay safe. All of you guys who was holding this position for about a week, well done. I'll speak to you later.
Away from zero gives a question of how long can risk assets continue to rally when you do have this type of diminishing Fed support and backdrop. Today, Austria's chancellor is going to visit Vladimir Putin in Moscow, putting out in a tweet, it was in German, this is a translation, this is basically, even though Austria is technically neutral, they are horrified by what's going on, and they don't want to have this humanitarian disaster transpiring so close to their borders. This, to me, raises some real questions. How much do these neutral players really play a role, which leads to what Kaylee was talking about. 11 a.m. President Biden is meeting with the Indian Prime Minister Narendra Modi. How much is there pressure to come out with a more direct stance when there has been this neutral feeling out of India? How much do we start to hear more pressure from Washington, not only with India, Tom, but also with China? And that really is where my focus is right now, given the fact that there isn't necessarily as broad a coalition as the United States and, frankly, the Western world would like to see, as a lot of people are skeptical, frankly, of the U.S., and a lot of people are skeptical of the traditional old-school Western world order.
Lisa, thanks so much. I do want to alert your folks on the French elections. I am absolutely thrilled to tell you that Jonathan Fenby, the author of so much about France, will join us later on Surveillance this morning. Really interesting election results, and we'll get the perspective forward for Mr. Macron, Madame Le Pen, and all towards the final election. Right now, on the equity markets, we start strong with Linda Dussel. She's senior equity strategist, Federated Hermes. Linda, just to cut to the chase, Kit Jukes has been doing this for a few years, and this is rare for Kit Jukes to say yields have spiked. How do you do equities when yields are spiking?
Well, the equity market's much more calm, relatively. We're looking at real yields that have spiked but are still quite low, and so the financial situation has been very, very positive for equities. We can look at scans for that. And I mean, bond market has historically been an excellent forecaster of a recession. But when you look at the 2 to 10 year spread and it says, all right, well, maybe in a couple of years we'll have a recession. And that's not something I need to write down anywhere. Everybody assumes this. This year is a strong year. So the equity market is looking at corporate earnings. We're coming upon earnings season, and we're still in a booming economy, even if we're concerned about profit margins starting to come down now, some pressure for profit margins.
When will we start to actually see that margin contraction, Linda? Is it now in the first quarter reports, or is it going to be later on this year?
Well, this is a big concern for right now, and this is what we're watching very closely, is right now as we learn about the reports for the first quarter of this year. Because last quarter, it was really impressive that I think mid to high 80% of the companies that gave us their earnings results were able to push through all of their price increases. The consumer, whomever was buying from them, had no problem if they groused paying for those higher prices. And so now we're starting to see some pushback in some areas with gasoline prices going up, with the price of homes being high and getting out of people's reaches. How pervasive will this be? And of course, this first earnings season, as it begins with the banks, remember the banks in the last quarter, they're the ones that started saying, we're having some problems with compensation big time. This goes all the way up and down pay scale.
Linda, how much is this concerning that companies can pass along the price increases, given the fact that the Fed has flagged this as a reason to be ever more aggressive?
Well, it's just too much money chasing, too many people chasing too much goods, too much money chasing too few goods out there. That's something that we used to talk about a lot in the 70s, and it's now coming back to us in the 80s. Both sides need to be corrected. And what we really want to see is people coming back into the workforce that look like they may have permanently left the workforce, which may have something to do with the fact that the Fed is saying, we need the stock market to get hit. Because as you introduced our segment here and you said, bonds are getting hit, what about the stock market? It's not been hit near enough. And if lots of people find that their actual portfolios got hit worse than they thought they would do, maybe they can't. Retirement for good, they may come back to work, and this all may start to settle down.
Linda, with the federated perspective, and I think of the Young Turks, Steve Auth, and the rest of you, when you look at the earnings season we're going into, are we setting ourselves up once again for a constructive and positive surprise on revenue, on earnings, on the forward view?
Well, we would love to think that, but we've been more reticent this time. We've been very, very bullish that corporate earnings would surprise. I think in the last 6 quarters they did do. The market analysts have brought up their earnings expectations to meet that. And now we've actually, in recent weeks, pulled back our expectation. We thought we might see 10% earnings growth this year. Now we're thinking maybe we only get to see 5% earnings growth this year, because we really do think margins are going to start to be pressured, and that's why it is more of a stock pickers market than it has been for the last 2 years.
Linda, thank you so much. Linda Dussel, Federated Hermes there, folks. And Lisa, there's the kind of amendment, 10% down to 5%. And I think of Ed Hyman and Evercore ISI with 9%. That's the parlor game into the JP Morgan earnings that we see on Wednesday.
I think it's going to be a really awkward earnings season. These companies,
I like that.
I mean, honestly, this is an awkward earnings season of 2022 because companies are not going to want to come out and say, we're making so much money. We're doing so well against the backdrop of crises and people who are feeling the inflationary pressures. How do they mask it, frankly? I'm wondering what kinds of carve-outs are companies going to put out there to try to make themselves look less good at a time when the Fed is concerned about how much they can pass along price increases, and frankly, consumers are getting a little bit resentful about how much they're paying.
We're going to stop the show here. This is really, really important, Kaylee. I think Lisa nailed it with the idea of awkward. How successful do you want to look right now? If I'm big oil, I don't want to look successful. But what about big industry or big bank?
Well, I think it's going to be definitely more contentious for these energy companies, especially because they are the focus of legislators at this point. We saw those CEOs testifying on Capitol Hill last week as consumers face the higher gas prices. But to your point on the financials and the banks, Tom, it'll be interesting to hear, though, Reed, considering how consumer-facing oriented they are, how sensitive they are to the economy. What's their view on a recession within the next 18 months by the end of 2023?
Well, John from Capri emails in. John, thank you so much for emailing in on your sabbatical. He says more bond talk. How about this? The real yield. I am on the 0% watch on the 10-year real yield as of this morning with a 0.14. That is a sea change since the beginning of the pandemic. We did that bond talk just for John on Capri.
How about the Dow? He's asking for the Dow.
He's in for lunch this morning. Stay with us on radio and television. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In France, President Emmanuel Macron and nationalist Marine Le Pen are headed for a runoff in the presidential election. It's a rerun of their 2017 contest that will reverberate across Europe. Macron received 27.6% of the vote in Sunday's first round, compared with 23.4% for Le Pen. The runoff will be April 24th. 3 polls show Macron leading Le Pen 54 to 46. Ukraine's President Volodymyr Zelensky expects Russia to turn to even more large-scale action this week in the eastern part of the country. He has been warning for days of new Russian offensive. Zelensky told CBS he understands there will be much more Russian weaponry than there is now. And it is another twist in the week-long saga of Twitter and Elon Musk. Twitter says the world's richest person has decided not to join its board. That touched off renewed speculation about the company's future. Musk owns just over 9% of Twitter stock. If he doesn't join the board, Musk wouldn't be subject to an agreement to keep his stake at no more than 14.9%. In China, the country's largest COVID outbreak in 2 years continues to spread. There were more than 26,000 new daily infections reported in Shanghai Sunday, an all-time high. That is despite an extended lockdown of the city's 25 million residents. Frustration is building amongst the population whilst they struggle to get food and medical care. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Has stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The war in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
We are going to get Ukraine the weapons it needs to beat back the Russians, to stop them from taking more cities and towns where they commit these crimes, and also to squeeze the Russian economy to increase the pressure and the costs on Vladimir Putin and the Kremlin and the Russian government.
Mr. Sullivan, our national security advisor there on ABC, managing the message for. Lots of messages being managed for this morning. Our message to you is, as Kit Juke says, a spike in yields. That's really all you need to know to start the week. I think it's been underplayed with all the other news. Markets are on the move, and for global Wall Street, you got to pay attention. Forget about Bitcoin down to 41,000, 10-year yield out to 2.76%. It's out a solid 2 standard deviations. That curve inversion, where did that go, Lisa?
Yeah.
Up 18 basis points. And Lisa, we got to go to it, to 4 digits, negative 0.1389. The 10-year yield by the end of the week, do we have a 0% real yield?
We have been moving really fast. Remember when we used to talk to people and we said, what level do 10-year yields have to go to before it starts to disrupt the equity trade? And people said it's not necessarily the level, it's the speed. Now we've got both, Tom. Have we reacted enough in a market that definitely seems skittish, but not exactly full sale risk off?
Kaylee Lyons in for John Farrow, who has a sabbatical this week, much needed. He's doing the final draft on drawdown meditation, which we look for a Christmas release. Right now, on this political moment, Amory Horton is in Washington, and far more importantly, across the landmass of Ukraine and the Sea of Ukraine, on the Black Sea, is Maria Tadeo in Luxembourg. Maria, what is the body language of the ministers in Luxembourg? Is it a body language like 1939, frankly, of pending war?
Well, I would say the war is already happening, Tom, and they're very aware of it. They do worry about this potentially spilling over from Ukraine into countries that are members of the European Union, but that's been clear now for a while. I think there's 2 things today happening here. One is we have the Austrian Chancellor going to Moscow to meet with Vladimir Putin. That's making a lot of people nervous here. This is a man with very little foreign credentials. Remember, up until now, the European Union has been very united in their message. They worry that perhaps this could change today. I had an official who told me this is not time for amateurs. And then the second thing they worry about, Tom, is the battle for Donbass. This is really what they see will now be the focus point here. The Ukrainians are already saying this is going to be like Second World War, tanks, planes, everything.
And what's so important, Maria, is quietly over the weekend, and Mr. Stubbs, a former Prime Minister of Finland, who's been a good friend of the show, made very clear, I am shocked at the discussion of Finland, of EU, Finland, of NATO. Could that happen?
Well, it could happen, and it could happen very quickly, Tom. There's already speculation that perhaps this is something we could see by the summer. So this is a spectacular turn in the politics of these 2 countries, joining NATO after years of saying that, well, they're not neutral. They hate that word. But, of course, not being involved in NATO as an active member, that could change and get put to something that looks like a vote before the summer. So this is already a major implication from this war in Ukraine. We've talked about this on the show. This war has already changed in many ways European defense and the way it looks going forward.
Anne-Marie, can you give us a sense of how important the Indian Prime Minister speaking with President Biden today is?
Well, it's incredibly important because it's not just that meeting. Then you have these 2+2s with the defense and foreign ministers of New Delhi and Washington as well meeting. And it comes as you have almost contrary reporting on what's going on. They're out in the open. You're seeing a lot of warnings from Washington to India about making sure strategically they align themselves with the West. And then you have out in the open India not outright condemning what is going on and actually abstaining from a number of votes in the United Nations that would do so, most notably last week, which would have kicked Russia off of, or did kick Russia off of the UN Human Rights Council. So you have these like real dichotomy happening. But behind the scenes, the reporting is that there's been a number of meetings. Most recently, State Department's Victoria Nuland was in India, and there have been discussions about the United States making sure they can help India and try to fill some of the gaps. Biggest issues are going to be India still buying Russian crude, deep discounts. There's reporting that they're trying to set up a system where India can also pay in rubles. And then there's also the fact that India is incredibly reliant on Russia for weapons.
Well, Europe, it's not just India that is buying oil. You still have Europe still importing oil and gas from Russia as well. And Anne-Marie, as the administration is focused on these countries that have yet to really take an active role when it comes to sanctioning Russia, what about Europe that has gone to a certain extent but hasn't gone all the way? Is there increasing frustration on the part of the administration about the reluctance of allies to make that move?
Well, so Maria knows this intimately because she's talking to everyone in Europe, but they are in Europe trying to ban or go forward and figure out how to potentially, at least on the margins, start going after Russian oil first, and then lastly would be natural gas, which is going to be incredibly difficult for Russia. But the bottom line for Europe is that this could potentially lead to many countries having a recession or also having demand destruction, telling consumers they have to use less. It's a difficult position for the administration, and they've been almost hands-off, I would say. They're aggressive in terms of trying to find ways to help Europe and fill the gap if they were to ratchet back some of that buying. But you have to remember, domestically, this administration, the biggest issue they are struggling with ahead of the midterms is inflation. If you have Europe, even India and other countries buying less Russian crude, that means supplies have to come from somewhere else. We would see prices spike, and that is going to hurt them domestically. So I think you have almost a strategic hands-off for a reason.
Anne-Marie, thank you so much. Greatly appreciate it, and particularly thank you for reminding me of the ugly Red Sox series against the dreaded New York Yankees. Maria Tadeo, thank you. I guess we'll join with you again in Luxembourg. Lisa, look at the economic data. I've been remiss in this. On the 12th, tomorrow, we get this important CPI report, and I believe I'm looking at a new statistic, Lisa, on survey. 8.4% top line inflation.
Yeah, and Bloomberg Economics thinks that it'll go to 8.5%, which would be the highest since 1981. This is a huge statistic. Will it matter, right? CPI Tuesday comes out. We're all expecting this. Yeah. How does that move the dial, right? Does the Fed get even more hawkish? Do people care? Or does this start to sort of be an old story that we have to look to the earnings to figure out how long does it last? Where do we see the peak? When do we see some sort of end and rollover in some of the base comparisons, given the fact it's not just the conflict in Europe, it's that China's in lockdown again. I mean, all of the base effects are not rolling over the way people had expected.
Well, a stunning lockdown in Shanghai. The videos of Shanghai and the skyscrapers this weekend were really something. We will touch on that with the Johns Hopkins University here later. We are thrilled you're with us on a Monday, an eventful week. On Wednesday into Thursday, Lisa Bramlett and myself, the meetings of the World Bank and the International Monetary Fund. Stay with us. Yields higher.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Surveillance. Good morning on radio and television. Jonathan Farrow on a needed sabbatical. Kaylee Lyons, extra duty this morning. Boy, did she pick the short straw on this. I mean, it was a disgrace that Kaylee had to come on this morning and do this. I'm sorry, Kaylee.
Oh, I'm happy to be here.
It'll be eventful through the week, Kaylee. Of course, Lisa Bramlett and I, we are set for Washington. Let's be direct, Lisa. This is not a normal meeting of the IMF.
Especially given some of the social unrest. And frankly, I want to be asking about that, given what we're seeing everywhere from Sri Lanka to, of course, some of the images that we have seen from Peru. How much does this become a sort of predecessor, a precursor for what we can expect with some of the food shortages and food inflation?
In the food inflation this morning, corn, I looked at U.S. corn breaking out to new highs, and off of the pandemic lows of corn, up 150-some% on U.S. corn, just one indicator there. Of course, much worse internationally as well. Neil Shearing with us now, Group Chief Economist for Capital Economics. We're thrilled he could join this morning. Neil, Jan Hatzius of Goldman was mesmerizing on Friday on a fully employed America. He says it's been massively underplayed, the amount of constraint within the American labor system. Do you agree?
I think I probably do, actually. The time when you look across the globe, the one thing that stands out is how policymakers are trying to face different challenges in different parts of the world. China, Europe, very different. In the US, it's the tightness of the labor market. It's how do we cool the economy without creating a recession. And I think the big puzzle in the US labor market is both how tight it is, but also what is happening with participation, because obviously employment has not yet got back to its pre-pandemic peak. So there's some measures, there's still a bit of slack there. So how much of that is permanent? How much of that is just a temporary effect of the pandemic?
From the first day of Capital Economics, you people have had your thumb on the pulse. And the sense this morning, a la Kitchukes and yields spiking, is there's a little bit of not so much instability, but out of controlledness to where we are right now with 2 standard deviation moves, seen all Japanese yen weaker as well. Is there a question to you of a frenzy right now?
Certainly, when you look at what's happening in the bond market and the moves that we've had over the last week, it does feel like there's frenzies in parts of the market. I think some of the concern about inverted curves has dropped out over the past week or so. But it feels to me that the central question when it comes to the US economy is, can the Fed slow the economy, cool the economy, have a soft landing without creating a recession? Everyone's trying to invoke 1994, but actually that's the exception rather than the rule. These things are much harder to achieve.
Neil, elaborate on that. So what do you see as happening? Are you basically saying that it seems very unlikely for there to be a soft landing?
Well, I think if you're glass half full on this, you would say, well, at the moment, leverage ratios, household debt looks manageable. There's not any large imbalances in the macro economy. Clearly, there's pockets of froth in financial markets and in some asset prices, but in the macro economy, there doesn't seem to be large imbalances. So that creates the conditions by which you think, well, actually, a soft landing might be possible. The question to my mind is the extent to which the Fed's already behind the curve, fallen so far behind the curve, is going to have to tighten by more than markets anticipate in order to play catch up. What QT does to financial conditions as well, that's another unknown in all of this. And also what headwinds there are from the rest of the world. What's happening in China is a major concern, I think, in terms of, are we now facing another wave of supply chain disruption?
Well, let's sit on that for a minute, because I was reading over the weekend some of the developments over in Shanghai in particular, and some of the protests of people living there saying, we're not getting food. We don't have some of the shipments that the government has promised us. Have supply chains sufficiently broken down to be irreparable over the medium term? And this is coming from a number of different analysts raising this question. How many years can this go on before companies have to really rethink and regroup, especially given some of the geopolitical tensions between U.S. and China at the same time?
Indeed, and then you've got Russia and Ukraine to factor in on top of that as well. So there's a whole swathe of geopolitical issues that they're going to be that companies are going to have to factor into their decisions about where to locate production over the coming years. I mean, I think actually the untold story of this pandemic, what we've focused so far on supply shortages, actually it's how resilient those supply chains have been when faced with what has been an enormous shift in the patterns of consumption in the world's major advanced economies. A massive shift in spending away from services towards goods. And by and large, supply chains held up. There were shortages of some goods, prices of some goods spiked, but by and large, they have held up. They've been stress tested and have been found to, and have basically held up pretty well. I think now the question is, in a world where it looks like globalization has peaked, we wrote 3 or 4 years ago, we thought we were in a world of deglobalization. I think everything since then has supported that and perhaps accelerated that. The question to my mind is, does that focus on trade, or do we focus in other areas of decoupling around finance and security and investment and technology? I think that's probably where we're going. I think most